Top of the morning, traders, and happy Thursday, January 22nd, and welcome to the most value-packed live trading show, where we live trade, break down charts, cover high-impact events, and talk trader mindset. Hopefully, everyone had a great day yesterday and is ready to kick off another opportunity-filled day. The gap ups, the gap downs, it doesn't stop this week. We got another gap up. We did have unemployment claims that came in. We did have GDP data that came in as well, and now we're awaiting the PCE data at 10 o'clock. So first things first, folks on YouTube, make sure to decide if you're trading before 10 o'clock or after 10 o'clock. Highly suggest waiting out the first few minutes because let the market digest the data. Right, we can get a little volatility there. If you're comfortable trading the first few minutes, by all means. But best practice is that the market digest the data before you start making those moves. You don't want to get caught up in an indecisive market, and you want to decide when the market does decide. Okay, so again, very important. So again, make sure to like the video, make sure to subscribe. Let's get the show started. Goal for this first hour, of course, is 30 subs. We can do it. Smash the like button, and let's get started. PMH is 690.07. 690.07, slightly above that 690 psychological level. Slightly above that psychological level. If you're a first-time viewer, go check out yesterday's episode. Go check out the episodes from this week. Okay? Go check out those episodes. And what happened yesterday stays in yesterday, regardless of how you did yesterday. It stays in yesterday. Don't bring that into today. Be as present as you can be. Look for your spots and capitalize. So 10 o'clock PCE. We're going to gap up to open things up. If you're wondering, where's the gap fill? Okay, the gap fill is 691.47. We got that. We know exactly where that is. We're tracking all these gaps. We're tracking all those levels. We're tracking all those levels. Matter of fact, we have too many levels. Okay. So we have too many levels. Okay, we're officially open. We're officially open. Look at that weekly candle, team. Strikers, look at that weekly candle. Tell me if that weekly candle looks bullish or bearish. That weekly candle is as bullish as can be. There goes the Dow. There goes IW. Out the gate. The Q's holding us back. The Q's are holding us back. We're above VWAP. Good morning, good morning, good morning. Good morning, good morning, good morning, guys on YouTube. Answer the poll question. I want to get a feel for the chat. Are we bullish or bearish today? Are we bullish or bearish today? We have that PMH right here, guys. PMH right here, which converges with that 690 psychological level. Daily open 689.85. Daily open 689.85. That's that daily open. TOG. So yesterday, what did we do? We fell below TOG. We grabbed TOG and then started to pump. We grabbed TOG and start to pump. We grab TOG and it start to pump. So we're just a couple of gaps away, guys. We're just a couple of gaps away. Just when you think that this is the characteristics of a bull market. Just when you think it's going to be a sell-off, maybe a crash, XYZ, the main thing you want to pay attention to is the response. Okay? The response. How does the market respond? How does the market respond? VIX is headed south here. We're seeing the Q's dump. The Dow, so strong. IW shatters all-time highs, continues to push. Look at IW. IW is above that PMH. IW, look at IW, guys. IW is headed, bam, smashes 270. Just smash 270. It's at 270.50. What's holding SPY back is the Qs. SPY is ready to go, but what's holding it back are the Qs. Keeping a close eye on IW. Okay, 5-minute orb army. Keep a close eye on those levels as well. Keep a close eye on these highs and lows. So that synchronized buying, we're seeing it across the Dow and IW. So the Qs, if the Qs start to base out, and IW and SPY can IW and the Dow can continue at the rate that they're on, that's what's going to really take us to the top. So can we hold above that 690? Can we hold above that PMH? That's going to be an area we can entertain. 5-minute orb army. You're on the clock. If you're trading before 10 o'clock, if you're not trading before 10 o'clock, there's nothing for you to do. You're just in observation mode. You're just seeing how price is interacting with these different levels. You're just monitoring the interactions. So right out the gate, IW showing a ton of strength. So obviously the low-hanging fruit setup is the VWAP, is the POC, is first wave, and PMH. All right, that's right there. So between that and 270. So IW, to kick off the year, guys, is leading the way. Okay, IW is leading the way. 270 might be a stretch. All right, I'll stick to this territory here. Between 269.75, 269.86. Since IW is a smaller dollar amount, 15, 20, 30 cents makes a big difference. Okay, that's a larger percentage of its total price. It's a larger percentage of its total price. So keeping a close eye on IW here. Keep in mind, it is at all-time highs. Okay, it is at all-time highs. Just trying to take advantage of that pullback off that momentum. We'll be there and come with that territory. SPY holding PMH. And what we saw yesterday, I should say. What we saw yesterday is we came in and we dipped into the jaws of the gap up, and then we took off. So we grabbed those lows, if you recall, we took off. The only difference is we didn't have a catalyst yesterday. All right, so let the market digest the data, the unemployment claims, along with the GDP data. Let the market digest. Okay, starting to pull back here. Okay, my option chain is little wonky here. Okay. IW, for some reason the box to type the ticker is not there. Interesting. Okay, nonetheless. Okay. SPY, see if SPY dips into that territory and grabs and goes. If it comes back into that 669.45, then that means it's going to start dipping. See if I can refresh. Refresh Webull here. Give me a second. Okay, so got above that PMH, starting to fade. Got above that PMH, starting to fade. Got above that PMH. Starting to fade here. Okay, we're back below that daily open. IW continues to push. Look at the Qs. Qs are really dragging us. The Qs falling off a cliff. Qs falling off a cliff. We're seeing IW continue to push higher. The Dow continue to push higher. So SPY is stuck between a rock and a hard place. SPY is stuck between a rock and a hard place. All right, see if we can get that nice decisive move. if the Qs, all the Qs need to do is base out. If they can base out, start catching a bit off those lows, start going hammer. With the Dow and the IW strong, we can see that nice push to the upside. If you're looking at the 5-minute orb, we're still within that 5-minute orb. Your time to shine is above that level, 690.36. 5-minute orb on IW is into all-time highs. So it came slightly into that 700, right? So if you use that 700, not 700, that 270 on IW, maybe you could have caught that. If you're waiting for that retest bounce, it didn't come right exactly to it. But nonetheless, it is starting to take off. And this is predicated on the Qs. If the Qs can get above that 621.17, that's going to help SPY get over that 690.36. If it does do that, the first initial runway, okay, with that momentum would be from these highs into there, into that weekly 50% retrace. Weekly 50% retrace. So you get a nice push. IW breaks. Okay. So 5-minute orb army. You got the trigger. See if it holds. We're getting some momentum. We want the VIX to continue to push lower. See if we can at least a 1-minute hold to rule out a trap. Okay, make sure to like the video on YouTube, guys. Make sure to like the video. Make sure to subscribe. Let's get the likes up. Smash the like button. Okay, look at IW. IW's taking off. IW's taking off. And we have 20 minutes until 10 o'clock. If you can start to pull back slightly, I'll take it to the upside in pursuit of 690.85. That's about close to a 50 cent runway. 50-cent runway. 50-cent runway. We're seeing the Qs go hammer. If the Qs can go hammer, break above those highs, break above 621.50, we can start to rock and roll. If they can break above 621.50, we can start to rock and roll. Anyone take that? Any strikers already in? After, before 10, either one trade, no trade, depending on the setup. Looking for an A+. Good morning, thesis. One trade after 10 a.m., A+ only. Good, good, good. Orbish, bullish, a little over 100%, 690 calls. Sancho's on an absolute tear. Okay, let's see if this 5-minute candle can show some signs, at least a hold. If the Qs start to dump, more than likely, and the ones that had the gain, the ones that were in the lead, the Dow and the IW start to pull back, we're gonna start to see SPY to pull back. We're gonna start seeing SPY pull back slightly as well. All right, so the action is very similar to a couple of days ago, or even similar to yesterday, from the standpoint of we went sideways, we grabbed these lows, we dipped into the jaws of the gap, and then we took off. The only difference is we triggered out those highs today, and yesterday we didn't trigger those highs. We just grabbed these lows and then took off. I took IWM 271. Beautiful job, Fido. Beautiful, beautiful, beautiful. That 270 bounce, right, was beautiful, right. Good, good, good. If you're waiting after 10 o'clock, all you're doing is taking notes. All you're doing is taking notes, guys. All you're doing is taking notes. You're observing how it's interacting with those levels. 15-minute orb, I mean, not yet. We're 18 minutes away. 18 minutes away from the data. So the last piece of the inflation data. Keep in mind, next week, we have the Fed decision. The interest rate decision. Keep in mind, next week, we have the interest rate decision. Okay, so we had the CPI, PPI, All right, I like to think of inflation as there's three pieces to inflation. PCE, that's the Fed's favorite measure, and they have CPI, which is the Consumer Price Index, and PPI, Producer Price Index. So when you combine all three, okay, maybe they should have a one that just combines all of them. Look at that. What was that? Look at that, guys. IW does look interesting here. IW, if you can bounce off that retest territory. Look at that. What a trap. That's a vicious, vicious trap. If you played the opposite way, shooter to the downside, that's interesting. If you're waiting, you're just waiting, right? Violence. The market is picking violence this morning. And we're dipping into the bottom of that, into the jaws of the gap from today. Not the gap from yesterday. The gap from yesterday, the 50% retrace is right here. So we're actually coming into that daily upside breaker, which is those prior day highs. So if SPY continues to fade, if the market continues to fade, with IW having the most amount of strength, I'm interested in picking up IW if we start to get a nice little bounce off that zone. Okay, see if IW can continue to come in. Come in a little bit. You can stretch out the VWAP. It looks like VWAP caught up to the it. See if you can drop one more time on IW. I'm looking at the 270s, 271s, 271s, of course. Out the money, at the money. At the money, 271. In the money, 270. See if IW can drop one more time. And I'll bet on that pre-market high holding. Just drop one more time, one little drop, and I'll be there for it. Okay. I'll take it right there. Take an IW right there. Okay, I'm an IW. If it just slices right through this territory with minimal regard, then I'll be out. I'll give it about 10-15%. So currently in the IW calls. See if the buyers can start stepping in here. Maybe could have waited a little bit for it to clear out. Down 10, down 12. See a nice little bounce. Okay, go, go, go. So I want this bounce to be, there was some follow through behind that bounce. So we're seeing SPY continue to sell off. So we want maybe a rotation into IW as we're bouncing. We don't want it to be a broad market sell-off. Don't want it to be a broad market sell-off. Let me jump over to the 5. How's that 5 looking? 5 is still up for grabs. 5 is still up for grabs. If you're waiting for PA confirmation, there's no bullish candles in that territory quite yet. No bullish. So the best case for this is the IW. We see bulls rotate into IW. I don't want this to be a broad market sell-off. Okay. Don't want it to be a broad market sell-off where all the indexes sell off. Okay, IW we're down 2%. We need to get back above VWAP 270.03. So 270 psychological level. Very closely tied to VWAP there. Okay. See if I continue to push. Go, go, go. We need to decisively get above VWAP, decisively claim that 270. All right, that 5-minute candle, if it can turn into a hammer, that'd be great. If it can't turn into a hammer, then just get stopped out if it continues to sell off. So I did see a little bit of green. Down 10, down 12. See if it's even turned to hammer here on IW. SPY completely broke down there, triggered that orb. I'm over here babysitting IW. Down 12 on IW. If it closes below PMH, I'm going to close out here. On the verge of getting stopped. Okay, I'm going to close out IW right there. For 15.16. Okay, close out IW there. That SPY breakdown though, that was beautiful. If you took that SPY breakdown, that was nice. IW. Okay. Stopped on an IW, couldn't get that bounce. SPY breakdown. All right, it was beautiful. Broke below that 689.45 and completely collapsed. All right, so IW might have been a distraction. Because we just broke below that, guys. We broke below the daily upside breaker on SPY. We broke below the daily upside breaker on SPY. We're in the jaws of the gap up. All right, so we're in the jaws of the gap up. Anyone catch that breakdown? If you did, tremendous job. 5-minute orb army, that's your time to that'll be your time to shine, as well as that 15-minute orb. So the G50 for today is right here. G50 for today is right here. G50 for today is right there. Make sure to like the video on YouTube, guys. Let's get the likes up. We got 20 plus people joining us. Good morning, good morning, good morning. We are live trading SPY. First trade we took IW. Got stopped out on IW. Okay, VIX is starting to rocket here. 15-minute orb army. That ripple played out beautifully. If you take the ripple with the spike on the VIX. Now it's getting close to that PCE. You caught it. Beautiful job, Joe. While at work as well. %0 DT, 45% 1 DT. Beautiful job. Take some of my gains. Beautiful, beautiful, beautiful. The market is wild, guys. The market is wild, to say the least. Beautiful job, Sancho. Beautiful job, Joe. Beautiful job, Euro. What I mean by that is it goes one way for some time and it goes the other way. All right, so IW. Okay, if it resurfaces, I could potentially re-engage. Might have been a little early, right? There's no real PA combination there. If we can reclaim those highs, I can possibly be there. But I don't want to lose focus, which is the bread and butter, which is SPY. Okay. Let's see if this is legit. We are seeing the Qs at pre-market low. So the Qs are at the very lows since 4 a.m. The Qs are at the very low since 4 a.m. So we do have this nice little key zone between that daily upside breaker and that orb, giving us a nice zone. If IW continues to run, I'm going to re-engage. Same risk, same stop. Needs to get above that 270. Needs to get above that 270. Oh, this thing is rocket. So that reclaim played out a little better than the actual bounce. How's the volume on YouTube? So we're getting some. Is the volume low on YouTube? Okay, let's take a look. IW is gone. Just a shakeout there. Let me check. His volume sounds good to me, guys. Just put your volume up. Just put your volume up. Volume sounds good to me. I can hear it on my phone. I can hear it on my phone. If you're a little more patient than I was, maybe I waited for that reclaim. Maybe you can squeeze something out of IW. On the 5, did it get a hammer? Okay, what's a loss for me right now? We're right in the middle of the 5-day, 20-day moving average. If we reclaim them, could set up for a nice possible inverted. Inverted had a shoulder pattern. I took starters down here, but I didn't get a good feel. If I get another little push, I'm gonna get in the trade. Don't beat yourself up. That's what the market wants. Absolutely. Right. The market wants you to be in your own head. It wants you to just beat yourself up. I want you to beat yourself up, then it will beat you up. All right. IW need to come back. Just have to be a little more patient here. Let it clear out. Get that reclaim. If your stop was wider than mine, if your stop was maybe 30%, 25%, maybe you can sit through it. All right. That's been happening a lot this week. SPY. Of course, this key zone on SPY is interesting. SPY. Let's take a look at where SPY is real quick. Okay, so this is where SPY is, guys, on the hourly chart. So SPY got above that 690. Okay, couldn't get that complete hold. And it started to push back the downside. And then now the only thing holding it up is this 200 EMA. If it continues to slide, SPY looks interesting for that dip buy intraday. If it continues to slide into PML, I want to see confirmed action. I'm not going to just jump in. All right, so I'm not going to rush the setup. We do have PCE data. We do have PCE data here in a few. Okay, let me get back to SPY. PML 687.22. 687.22 is PML. 687.22 is PML. Good morning, good morning, good morning, guys. Make sure to like the video on YouTube. Make sure to subscribe. Make sure to subscribe. If you're interested in joining our community, links are pinned in the chat. Ready to level up your trading. Jump in our community, take advantage of the resources. 687. 687.22. Okay. Nice little retrace reject of that territory. IW starting to pull back slightly. Six 4 minutes. So I'll wait until PCE data gets dropped. Right. If I enter a trade now, have basically 3 minutes for it to make a move. If I intend not to. Trade into the PCE. Trade into the PCE. Okay, good morning from TO. Good morning, Nico. Vote, guys. What do you guys think? Are we bullish? Are we bearish? We did get a nice little flag under it. Right, came back, retrace, reject. So the ones who did catch the 5 minute breakdown below 689.45, a 688.93. Right, you could potentially be done for the day. Now the ripple has worked out beautifully here. So we're 3 minutes away, about 2 minutes away. So in this area, we have a lot of things converging. We have the 50% retrace of today's gap. We have pre-market low. And we have 50% retrace of the gap from Tuesday. The weekly opening gap. So let's see if buyers want to step up in this territory. And we also have our bounce zone as well. So let the dust settle. If it slices right through it, comes back into it, I'll see if there's a reclaim on the table possibly. Right. See if there's a reclaim on the table possibly. PML 687.22. The Qs are selling off here. Dow selling off. IW selling off as well. So this last drop here was broad market sell off. It was a broad market sell off. So far, one trade on IW, stopped on IW, no trades on SPY. But there were some good opportunities. So good opportunities. They are giving us opportunities, guys. Let's check in on the Discord. Took a loss, I'm done for the day. If we revisit 690 today, I'm selling it. I like to bounce off the 200 EMA on the 5-minute chart. I saw that touch on the red line. So puts, beautiful, beautiful. Ice cold weather coming. Check UNG. Take a look at UNG here. You crushed on UNG yesterday. UNG. Natural gas. Potential breakout brewing. Full disclosure, I haven't traded UNG before, right? But potential breakout brewing, right? If we can get that nice, of course, it's resistance. If you can prove it otherwise, get above that 1436, right? Has some room to start running. Take a look at it on the weekly real quick. Okay, that weekly, nice spike on the weekly. Nice spike on the weekly. Okay, PCE data is here. PCE data is here. PCE data is here. PCE data is here. All right, let's see how we react to that PCE. So we're in this key zone. All right, so I have to let the dust settle a little bit here, but just imagine the algos are right at that key zone. So do we protect this key zone? Continue to push. All I can do at this point is take advantage of the momentum on either side from the key zone. So if we use this key zone as a bounce, I'm going to take advantage of the momentum to the upside. If we just slice through this key zone, everything is selling off. We get below it, then I can use the momentum to the downside. Right? We're not at the PML yet. Okay, we're in that bounce zone here on SPY. PCE data, let's take a quick look at the PCE data. PCE data, 0.2. Okay, so in line with the forecast. In line with the forecast. So relatively muted reaction. Maybe it's a delayed reaction. All right, give it a couple minutes. Give it a couple minutes. Give me a thumbs up on YouTube if the audio is good. Thumbs up on YouTube if the audio is good. Yeah, freezing cold weather coming our way as well. Okay, let me take this off, clean up the chart a little bit. So we're after 10 o'clock. We got the PCE, we got the GDP. We're sitting right in the middle of in the jaws of that gap. Potential hammer on the 5 at the PML. I can potentially look to go long there, or the reclaim. If it's a dead cat bounce, it gets us back at those EMAs. If it's just straight sell, slice right through it, then get stopped. IV is relatively back to normal-ish. That's just hovering slightly above 20. Hovering slightly above 20. We also have that hourly candle as well. We broke below the hourly low. So we're directional on the hourly, which is the 10 o'clock candle. All right, we're directional on all the candles that came in at 10 o'clock. So the hourly, the 30-minute, the 15-minute, the 5-minute, we broke all those lows. So that's a compound break. We're below PML here. We're below PML. If we have no respect for this, I'd be surprised. Buyers are trying to step in here possibly. So if you're looking to short, you want to see if you can get some pops back to the upside. All right, so if you're trend trading this, you want to see some pops back to the upside. Some signs of strength. You're gonna fade the strength. Looking to potentially put that reclaim on my end. Let this candle clear out. Maybe get another candle in the next minute or so. Take out these lows and then go hammer back the upside. That'd be great. VIX shot out of a rocket. Okay. IW pulling back to PMH. Same as the Dow. Same as the Dow. See if you get a nice push here. Reclaim is 687.45 is what I'm looking for a nice push to the upside. Giving it a few. There's still some selling pressure on the 15, on the 5. This 15-minute candle is fresh. So I'm just being patient. Just being a little patient here. If we can get above 687.45, that's one sign that we can potentially start bouncing. We're moving about $1.27 per 5-minute candle, guys. We're moving more than we were the past few days. $1.27. So it might be a good idea to use less size. If you're not familiar with this volatility, or if you're not familiar with how quickly we're moving as far as the ATR is concerned, we're covering a lot of ground. All right? We are covering a lot of ground. 14% on puts. Beautiful, beautiful, beautiful. So we know there's a lot of things going on in this territory. We know there's a lot of things going on in that territory. We get a nice hammer there. If you're waiting, if you're officially waiting on the 5-minute, you need an inside candle or a hammer for an actionable signal. All right, there's still some selling left. Qs are selling off, Dow selling off. They can't protect that. Now, then that means we're below. We are below the 50% retrace of the gap from Tuesday. We're below that pre-market low, and we're also below the 50% retrace of today. So I'm anticipating some sort of response off this level. All right. I don't think they're going to give it up easily. The bears are going to have to fight for this. Okay. Let's see if we can get some signs of buying. We're seeing IW testing that PMH. Good morning, everyone. It looks like downward momentum is slowing down slightly, but we don't want to discount. I don't want to discount the fact that there's still some selling pressure. I want to get a hammer on the 5. All right. That would be great. Some signs of life on that end would be great. Okay, if we go 2 down, 2 up, I'll be there for it. Okay. Take the calls right there. Take the calls right there. See if you get some follow through. Give it about 10-15%. So first, trade on SPY. So PML is strong. PML is very strong. Still seeing some pressure on the VIX. So that 5-minute candle can go hammer. That would be great. So just take out these highs. We can start to go. We continue to accelerate. I get to 10-15%, then I close out. So a little front running here to get that best entry. I want the VIX to start cooling off. The VIX is still hot. VIX is still hot. If the VIX can show some signs if we slow down, that'd be good. I want this 5-minute candle, the 5-minute candle to close as a hammer. I want it to close as a hammer above that level. If we can get above 687.46, things can get interesting. Okay. We need to get that nice push above it. So we need to get a push above it. Buyers need to declare victory over it. Don't just get into it and then wick. Okay. Go, go, go. No wicks. Just go. Decisively push above 687.46. We'll be good to go. Okay. Up 8. Up 11. Take majority off right there. At 11, down to runners. Go, go, go. Now I want this candle to go candle over candle. Candle over candle. Okay. I like how that 5 is shaping up. I want that 5 to keep that wick under it. If we give everything back up, get stopped out with the runners. We're still leaning towards hammer on the 5. So I want that wick to remain. I can sit through a little bit. I want that wick to remain. I want while it remains, I want the VIX to start cooling down. I want the Qs to get picked back up. IW's getting picked back up. Once these lows get violated, we get a lower low, then the idea is off the table. Okay. Go, go, go. We need to decisively claim victory above 687.46. Okay, now we have a 5-minute hammer. If we can start to go, that'd be great. Go, go, go. Break above those highs. And then eventually, that can put us in position for this break here. Okay, go, go, go. Up 13. Up 16. I'm going to take some more off right there. Okay. Let's see if we get that continued follow through. So now what I don't want to see is this 5-minute candle take out these candles lows and go engulfing back to downside. All right. Don't take out the session lows. If we can remain above those session lows, these can be the lows for this current session. Right. I can sit through a little back and forth. Once those session lows get taken out, then I'll be out of there. Or even get back below PML, which is around break even. Okay. Okay. I'll close it right there. All right. Don't like how that thing is starting to go potential 3 down. So quick scalp there. Couldn't get the exact move. Continued push with some follow through. But we'll settle for that. All right. Still didn't take out those lows. If we can reestablish control in this area, I don't mind re-engaging. Okay. So I don't want this 5-minute candle here to take out those lows. Maybe you guys saw double digits if you have those the one or two DTEs. With those zeros, you definitely saw double digits. Right, so we know this zone is going to be critical. We're going to, within the next 15 minutes from now, we're going to create separation away from this zone. Okay. Okay, let's see if we get that continued push. If we can reestablish control above this 5-minute candles high, I don't mind re-engaging. I need us to get back above 687.46. I don't mind re-engaging. I don't mind. Keep in mind, this is a super, super early entry. All right, we're like the first ones to the party, to the point where we're so early to the party, we're helping set up the party. All right. So still not fully in the clear. That 15-minute candle, that's also brewing in a minute or so. If you're waiting for that 15-minute reversal, continue to wait. It is in that bounce zone, so that 15-minute reversal would be great. If you have those further data contracts, if you like further data contracts. Okay. Okay, I'll get back in right there. I'm going to get back in. Okay, see if they can continue to push. Okay. Now I want us to stay above PML. I'm putting myself in position to see if I can take advantage of that push into those highs. Up 9. Take some more off right there. Take some majority off there. Okay, up 11. Go, go, go. See if that can hold. See if that can hold above that level. See if it can hold above that level. If it can, if it gives it back up, if it gives back PML, I'll cut runners. Right, I'm trying to position for that break until you push higher. For that break until you push higher is what I'm positioning for. Down 6, down 7, nasty trap. PML can hold. If we can start to wick, we can start to get back some ground, get back above 687.46. I'll hold. There's a quick TP for 9. Did see double digits. So just babysitting this runner. Okay, so let's see if this runner can continue to push. Go, go, go. One thing that is concerning, okay, to keep in the back of our mind, is this support. Trend line support needs to hold. Trend line support needs to hold. Needs to hold. Okay. See if they continue to push. Go, go, go. Want clear separation. We do have a sell block. We do have a series of sell blocks. I do like how the VIX is starting to push lower now. I do like how the Qs are starting to push as well. Okay, make sure you TP where you need to if you do take that with those zeros. Did see double digits. So I want this support line to hold. Let's see if we can go for a nice little ride with that support. Okay, go, go, go. We're about to go 15-minute reversal here, guys. Up 14. I'll take it off right there. Okay. If it comes back into it, I'll re-engage. Close everything right there for 14. Right, just don't like how we push, wick, push, wick. If you're still in, that's good, but I had to take some profits off the table. Okay, there might be another entry available. That 15-minute entry is not there yet. The 5-minute, we're struggling. We're making progress, but we're struggling. Right, I don't like how the Q's rejected there. So two double dips, double dipped. The closer we get to second shift, the more interested I am in these grabbing these lows. Now we're going into that 9 MA. You can see, right? Did we flip the waves on the 1? Didn't flip the waves on the 1 quite yet. If you're waiting for that dead cat bounce, that support is your time to shine. If we get back below 687.22, everything starts to sell off. We can see a push into session lows. Right, so they didn't give us much here. They didn't give us much here, but we were able to squeeze 2 TPs out of there. Okay. They didn't give us much. Make sure to like the video, guys. Make sure to like the video. Make sure to subscribe. Looking for it to break the 686.40, 54 rearly open and wick back out for longs. That's good thinking. VD the VD, but many bounces here. Yeah, lots of back and forth, right? We can see the 5-minute candles. A lot of back and forth. Okay, so we know there's going to be a pretty significant move, but they're making you sit through a lot. So what's my solution to that? Double dip. If it continues to emerge, continues to push higher, I'm not losing context. I'm not forgetting where we are. I'm still relatively early in that bounce zone, right? So I can see, guys, strikers on the 15. Look at this. On the 15, for us to really reverse on the 15, we need to get above this candle's high, which coincides closely with that 200 EMA. Okay. So it's still relatively early, but we can scalp it and take advantage of it multiple times. I made some lemonade out of those lemons, 100%. They didn't give us much there. We made something out of it. 30% IWM, beautiful job. Good. Anyone still holding? I would love to see 687.95 become support. Yeah, that would be beautiful. So we can adjust it slightly like this. Right. So if you're bullish, this is your runway. There is crushing a lot of premium. So if you have further dated contracts, maybe you can sit through a little bit. Right. As long as you're within your risk is defined. If you have those zeros, you can approach it the way I did. Keeping a close eye on the 15. Close eye on that 15 to get that 15-minute reversal. Okay. 15-minute reversal on the horizon. It is coming out of that bounce zone. Just keep in mind, as it comes out of the bounce zone, it's going to come into those EMAs. Those EMAs to the downside. Okay, we're starting to see a nice push. Good morning, guys on YouTube. Make sure to like the video. Held those calls. Beautiful. I had to sit through a little back and forth. The risk was defined. Make sure you're taking profits, guys. That's that. As long as you're taking some off, you're paying yourself for your services. That's what matters. Okay. Happy trader equals paid trader. Regardless of where it goes, you're going to forget where it went. A week from now, you're not going to care that you didn't hold an extra 3, 4, 5 points. All you're going to care is that you have something to show for it. All right. Do you have something to show for it or not? That's very, very simple. So that entry that was provided, that was an early entry, very early. And that triggered the 15 now. So the 15-minute reversal camp is starting to jump in now. But just know the 15-minute reversal camp, they might have further dated contracts. So that's why we have to operate, or I have to operate, on the lowest time frame since I have the shortest dated contracts. Right? If you have 0 DTEs, you might not have the luxury, especially if you're trading them quote unquote responsibly. You might not have the luxury to use the higher time frame because the higher time frames cover so much ground. Right? It's very easy to be down 20% on a higher time frame candle, but it looks like it didn't even move. 25%. Beautiful job, Carla. Back to options, Carla. Good. Slow grind. But as long as this remains, if you can sit through the grind and you're taking profits on the way, you should be good. So 3 trades in first shift. All right, there's one idea, but 2 trades there. Absolutely, when the opportunities are there, it's beautiful. Good. Okay, so now that bounce zone is playing nicely. So what I have to do is I have to wait for a retest to get back in the third time. If you're still in, you're laughing to the bank. All right? You're laughing to the bank. Don't chase. All right, strikers, we're given the entry here. So if you're chasing up here, unless you have further data cons, all right, it's not gonna look good. Right, this is the entry. Anything below 680, 687.45, you're in good position. All right, anything below here. But you had to sit through a lot. You had to sit through a lot of back and forth here. So kudos to the folks who did sit through this if it was within your risk. So what I mean by that is, say if your risk is defined and you sat through this, but it was within your risk, and you did the responsible thing, took profits where you need to, right, you were rewarded. Because the market, guys, is vicious. Right, they're playing. January's been a vicious. Look at this now. Look at this. Right, that rejection, that nasty wick on the 5, this can lead to a flip back to downside. If the support of this channel gets compromised, my goodness, this is within a minute, within seconds, we're seeing some major moves. And don't discount the fact that we're moving $1.15 per 5-minute candle. 28%. Beautiful job. If this thing starts to break, the downside looks interesting for the continuation traders. Nasty candle there. 28%. Beautiful. I'm going to let first shift wrap up. I did take one trade on IW. Stopped out there for 17. Did take the calls here. One trade, one idea, 2 trades. Both worked out. The back and forth is real, guys. The back and forth between under that 688.73 and above that 687.04. A lot of back and forth. Okay, so I'll wrap up first shift. We're starting now. Okay, we're trapping those. Looks like a failed to up reversal on the 15. All right, if you're just a trend trader, okay, you know that this is the leg. Okay, it's a game of legs. All right, what you're waiting for is, okay, let the bulls have their fun. Let the bulls have their fun. But once you get a clear break of this, potentially a drop back if you use key levels as well, a potential slice right through 687.22, which is PML. Right, that's going to give you the confidence to say this continues to push lower. Right, but in this juncture here, guys, the manipulation is unreal. Right, so they're making sure that anyone who's long here is either stopped out or has already taken profit. Okay, either stopped out or already has taken profit. Unless your entry is below PML, right? Like unless your entry is all the way down here, like the first entry here. But I'm not willing to sit through this back and forth with a 0 DT, right? That's too much of a headache for me. That's too many emotional swings. Further data contracts maybe, but with a 0, with like this, right? That's an emotional roller coaster. Okay, you're gonna age very quickly. Okay, if you try to sit through this consistently with a 0, best thing to do is take some profits, reassess, take it again. I would prefer that. $17 IWM. So IWM shook me out earlier. So I might have to go revisit IWM in second shift. We'll see. Let first shift close out. So they anyone going long here, okay, at the top of the channel gets wiped out or stopped out. They try to chase all the way here, trace that break, they get wiped out as well. So a lot of traders got within this candle here. There was a lot of, this is a liquidation event, mass liquidation event. Okay. And it's only first shift. Okay, it's only first shift. For some reason, this first shift seems like it's 2 shifts. 2 shifts in one. Maybe because I already took 3 trades. But again, this key zone is holding. That 15-minute candle did see a little bit of a pullback. Starting to recover. 1 minute left on that 15-minute candle. Nice engulfing candle on the 5. We're going to VWAP. We're testing VWAP. We're about to test VWAP here. The waves are waving on the 1. Finally. Okay. So the trend on the 1 has flipped. The 5 has not flipped yet. Great job, strikers. Good. Good. Make sure to like the video on YouTube, guys. Make sure to like the video on YouTube. Make sure to subscribe. Make sure to subscribe. If you're a first-time viewer, let us know where you're joining from. Long-time viewers, take the next steps. Join our community. All the details are pinned in the description. First-time viewers, we do have a free tier Discord you can take advantage of as well. Ton of resources for you there to take advantage of, absolutely for free. All right. So do me a favor, everyone on the stream right now. Make sure to hit the like button if you haven't already. We have 30 people plus joining us this morning. So let's try to get 30 plus likes. All right, 30 plus likes. We can do it, guys. We can do it. Okay, so again, that's the level, that's the zone. Did price create separation away from it? Yes. Was it the prettiest separation? No. It was ugly. There was a lot of back and forth. If anyone withstood that roller coaster, you deserve to get compensated. Okay. you earned every point. Did it shake you out, Hero? No, this 2-minute candle that was just a fake out. Still have 3 runners. Good. After taking those profits. Beautiful. Good. So now we're back at VWAP. VWAP is quickly approaching 688.84. We're officially in second shift. So, okay, mark out how many trades you took in first shift before you take any other trades. Where are we in the grand scheme of things? What catalysts did we have? We had three red folder catalysts, 2 in the pre-market, and 1 at 10 o'clock. Right, we had the unemployment claims. We had the GDP in pre-market. In pre-market, we gap up. We come into the jaws of the gap. We come into 50% retrace territory along with a bunch of key levels, which give us a key zone. And then now we're on the cusp of testing VWAP. Right, what happens on the other side, we'll find out. But this puts you in position already to be in position to take advantage of that VWAP reclaim. If it rejects off VWAP, that's fine as well. If it gets above it, that's what you want to see if you're long. Okay, so let us know how many trades you took. I will do the end of stream poll, of course, at 11:30. And folks on YouTube, take a quick look at this short video going over the features of our private community.
Tired of wasting hours staring at charts, over-analyzing trades, and still ending the day with inconsistent results? You're not alone. That's exactly why the Spy Strikers Trading Mentorship Discord community was created. Here, you can trade just one ticker for 1 hour and make strides towards consistent results. Join the Spy Strikers community and get daily live trading, clear pre-market game plans with key levels and high probability buy and sell zones, over 4 hours of delay-free, ad-free live trading and training, plus high win rate trade alerts, automated technicals that simplify charts, and full access to my strategies and indicators. This isn't a signal service. It's a community focused on process over profits, giving you all the resources, guidance, and training to help you succeed. You'll also get a full watch list, 1,500 plus hours of live trading videos, courses, an educational library, ebooks, and dedicated support. Stop guessing. Start trading with confidence. Become a SPY striker today, and take your trading to the next level.
Okay, welcome back, folks, on YouTube. Let's get the likes up. How many likes do we have? We'll do the giveaway with 50 likes. We have 35 people on the check-in. Let's get more than 10 likes, guys. More than 10 likes. We need 50 likes, all right? So if you're enjoying the stream, hit the like button. It doesn't cost you a single thing. Okay, now the VWAP, run out VWAP is right here. So do we get above VWAP? Do we get below VWAP? That is going to be up to people who take trades, VWAP-based traders. This is your time to shine. All right? Price is right there. So there are traders who are VWAP-based. So this is your time to shine, your time to make decisions, your time to look for those opportunities. All right, so this run-up, despite the back and forth, this run-up, okay, it did go for $1.70. All right. Of course, it's going to look clean on the 15. On the 15, it's going to look like nothing happened. That's why it's so dangerous when you do hindsight analysis on the higher time frames, right? You don't see what's really taking place. So at this point, we're in continuation mode. So at minimum, we went reversal, continuation. At minimum, we need to get above this. We need to get above that level before 11 o'clock. That hourly 50% retrace that coincides with the VWAP. We're above VWAP now. Don't want that to turn. If you're bullish, you don't want that to turn into a VWAP trap. Sometimes, from time to time, they like to do that. They like to peak above VWAP and then trap some of the buyers, and that's going to impact the people who are long right off VWAP. People who are long down here, early seat. People have the early seat, right? You kind of just maybe babysitting runners. Maybe you're already locked in profit. If you're locked in profit already, don't concern yourself with where this thing goes. Concern yourself, where's my next opportunity? All right, instead of FOMO, letting this build FOMO internally. All right, instead of saying, oh, if I held it, don't concern yourself with that. Just say, where's the next opportunity? That's it. Okay, where's the next opportunity? Okay. So now we're back above that daily upside breaker. We're back above VWAP. We're back above all those levels. We're back above all those levels. We are back above all those levels. And just like that, this is it. So this is not some level, this random level from this morning. Okay. So if you want the levels, you have to be in the Discord. Okay, this is the game plan. This is the game plan. This is the bounce zone until proven otherwise. We actually even mapped it out in the pre-market plan. We said we want to see something take place there. Want to see a grab of that PML for that dip buy. Right, so the big question is, if you got that, good. If you have 5%, 10%, 20% still in it, fantastic. If you didn't get it, don't let it FOMO into it. Unless you can find an entry, unless you can find a seat on the train, don't just stand in front of the train thinking you're going to board the train. Okay, so now the question becomes, do we have enough fuel after grabbing those lows? This is the $1 million question. After dipping into this bounce zone, that already took place. Do we have enough fuel to get us above 690? Of course, there's intermediate levels in between, right? But the big thing is, on the bigger time frame, is do we have enough fuel to go from where we were to fuel us into 690? Once you get into 690, do we have enough fuel to get into that 690.57? All right, so even that 690 break gives you enough room, okay? If you have a strategic approach, All right, this is enough room for you to extract profits. All right, so even if you get the 690 break, okay, say you're waiting for 690, from that 690 to these highs, if that's your target, that is a double-digit opportunity. Okay, so don't always fall in love with catching these massive trades. All right, are these levels going to give you massive opportunities? You do what you want with the trade. That's discretionary. All right. Some people like to take profits. Some people like to hold. All right. We have all sorts of different lines of thinking, but the main thing is you need that level or that zone to make that decision to engage. Okay, that's not coming back anytime soon. That's gone. That's long gone. This is on its way. All right, so now if you're looking to go long, the reversal took place already. We're in the jaws of this inefficiency, of course. We have a sell block here. We have POC at that 689.72. Expect to move 689.32. So are you comfortable going long at the very top? Do you want to pull back into VWAP? Do you want to pull back into other levels for a continued push? Maybe you want to pull back on the 5. You want the 5 to take a pause. We haven't seen a pause on the 5 for the last 15 minutes. Do you want to see a pullback on the 1? Right? And this is kind of looking like the inverse of yesterday, guys. What is this looking like? What pattern do we see here, guys? Potentially brewing. Okay. Nice cup and handle, round the bottom. Okay, so see what does take place there. We'll keep a close eye. So are they going to do the peekaboo? Peekaboo meaning we peek above VIX, trap those longs, and then dump. Is it a peekaboo? Peekaboo setup. Do we flip the 5 yet? Not yet. We have not flipped the 5 yet. All right. We have not flipped the 5 yet. And we're right at 50% retrace as well. So this is a critical area. This is very similar to the setup we took a few days ago when I clipped out that video. Okay, clipped out that video. So in this case, that 50-50 is here. Okay, 50-50 is here. What we need to see in this case, let's take a look at the indexes. Okay, it starts to pull back. If we can break below, if we can get that close below this 5-minute candle's low. So the 50-50 would be a push back to downside. That would be a bear setup. So there's a last minute or the fine line in the sand for this entire move to be reversed. Okay, so if we can get that close below 686.66, that's the line in the sand there. There we go 50-50. There we go 50-50. If we just continue to accelerate, create separation away from here, then that 50-50 is off the table. Okay. In that case, of course, the environmental conditions, we want those conditions to line up. Currently, the Qs are pushing higher. The Dow's pushing higher. IWM is out of here. Can't stop making all-time highs. It can't stop making all-time highs. 72% of the chat is bullish. 72% of the chat is bullish. 72% of the chat is bullish. If you guys are just jumping on YouTube, make sure to like the video. Let's get the likes up. We're live trading SPY. Last trade idea, calls off of these lows. Handful of our members took advantage. All right, anyone still in? Holding. Okay. Watching the retest of VWAP PML. Still holding runner, 2 runners. I'll get it out if it gets up to 20 days. Okay, 20-day EMA. 28%. This thing is looking very bullish, guys. 17%. So if you're still holding, congratulations. 28%. Good. Good, good, good. We're starting to see Bitcoin creating separation to the downside away from the 90K. The VIX back all the way below 16. So that 50-50 is not there. So this is on its way, level by level, to 689.45, so on and so forth. Okay, so on and so forth. We're back above daily upside breaker now. We're back above daily upside breaker now. Okay. Nice engulfing candle on the VWAP. What a day. 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 Anyone else babysitting? For some reason this week I haven't been letting the runners go. All right, I've been kind of blocking my runners. Maybe it's just the kind of action we've been seeing that kind of starts impacting. Like if you see what took place. All right, we're starting to clean up now. Starting to get a little cleaner, but we can see this back and forth here. All right, a little cleaner there. That should be up about over 200%. So if you got it from all the way here, that should be up over 200%. Those contracts, those calls are now at 135. 135. I had them at 85. So this kind of played into it a little bit, that back and forth. Okay. That back and forth played into it a little bit. We're going back to 5-minute orb. We're going back to that 5-minute orb here. What a bounce. What a bounce. If anyone is diamond handing this, you're in good position. And if it continues to show strength, you can potentially add to the position because your cost basis is so low. If you feel comfortable. So instead of engaging and paying market price on a pullback, you can use your cheap cost basis if you want, if you believe it's going to continue to push it to 690, to engage and give you the cheap price, a cheaper price. You're not paying market price. So say if you have 5 contracts and they're at 85. Now the contracts are at 150 and you're going to buy them at 150. So all those contracts get added up and they get divided. So you're not paying 150. Your cost basis at 85 is bringing your average price significantly lower than if you were to open a position at 150. Okay, this is a strong trend to the upside, guys. Strong trend to the upside. Qs are out of here. Everything is pushing. Everything is pushing. Everything is pushing here. And yesterday we were slow grinding and popped. I have been along the way. I've been adding and taking profits. That's very smart. Adding, taking profits, adding, taking profits. So laddering into the positioning, ladder into position, getting out. Man, oh man, oh man. All right, so now this leads us, now we're headed to 690. 690 is the next level if we can reclaim 689.45. 689.45. So we just dumped to pump. We just dumped to pump. That daily open, 689, 85 is right there. So if you take a look at the candle so far on the day, it went from being super bearish to potential hammer. That's how quickly things can change in these markets. That's how quickly things can change in these markets. Okay, it happens faster and faster and faster and faster. Again, these cycles are getting faster and faster, guys. So we're back in the middle of the range. Take this off here. We're above the 50-50. Okay. We have that 688.73 right here. 688.73. Keep in mind, tomorrow is Friday. Tomorrow's the last day of the week. I bring that up because if you're green today, if you're green yesterday, if you're green this week, or if you just crossed the line and became green off that last trade, you can start playing defense early. Protect your lead. What are the ways to play defense? Size down or don't trade. Right? You want to start closing that week out. If you're nice and green, you can start sizing down immediately. If you're sizing down because it's a red day, volume and balance there, volume and balance there. Right, look at that. Rejection off 689.45. Do we get that bounce off 688.73? We shall see. We came right into that 5-minute orb high. We came right into that 689.45, which happens to line up with the 5-minute orb high. 5-minute orb low, I should say. I take that back. 5-minute orb low. Right, the 5-minute orb high is all the way up there. PMH is within striking distance. 690.31. PMH is within striking distance. 690.31. $690.31. Nice little bounce. Is that legit? I can fix this a little bit. That action there is a little messy, so I'll just take that off. But overall, we know we're trending to the upside, right? But it's important to keep context because we're not expanding. Okay, we're not. This is not an expansion trend. It's not accumulation and expansion. This is the reversal. Okay, this is just a reversion back to where we were. It's just a reversion to going back to where we were. VWAP was being put under pressure. VWAP was being put under pressure. Take a look at the one. Let's take a look at the one here. Let's see if we go hammer up. Hammer time above those highs. Nice hold above those highs, possibly. If everything holds up. This action here, very messy. Like weird candles. Looks like grains of rice. Okay, rice candles. On the 5, we are in the jaws of buy block. We are testing. We have 8 minutes left on this hourly candle. So once this hourly candle closes, so if you take a look at it on the 15, okay, we reversed, we continued. Now we're seeing some slowdown right at that 50% retrace that hourly candle. All right, so we're seeing that slowdown right there. So in the next 7 minutes, we're going to get a new hourly candle. And that range is going to be from 10 o'clock all the way to these highs here. And the target would be 690. If you take a look at the hourly candle, you can see it. So this hourly candle is going to close. Okay, the highs are going to be here. So now on the hourly, we're on the verge of reversing on the hour. So you can see how the time frames are fractal. Right, first you see the reverse on the 1, then the 5, then the 15, then the hour. So there's no reversal on the hourly yet. On the 30, we already reversed. 15, we already reversed. We're actually continuing. On the 10, we reversed. We've been continuing. On the 5, okay, we reversed here off of these highs. 687.54. On the 1, right? What was at this hammer here? Okay, so new hourly candle coming up. New 30-minute candle coming up. Top of the hour. New 15-minute. 4-hour candle still has some time. Look at that 4-hour candle. Okay. Doji on the 4. Okay. 4-hour candle comes at 12. So doji on the 4, doji back to back, doji in pre-market, doji hammerish type of candle, and doji on the 4 as well. On the 12-hour, right? We're about to become direct. We are directional. We're about to become green. On the 6-hour, starting to push. All right, so what we're paying attention to now is 12 o'clock and 11:30. 11:30 because that's the bottom of the hour where all the major candles, including the 4-hour, all right, we get that new candle. So when I mean the bottom of the hour, I mean the 30-minute intervals. Okay, so that means when you're not including the extended trading hours on your chart. Okay, so if you see the hourly candle with the extended trading hours, keep that in mind, and now look at the hourly candle on the regular trading hours. It's inside. You see how you have 2 candles at all times? You have 2 candles at all times. There's two of everything. Okay. VWAP. If the VWAP starts to crack, that can be an issue for the bulls. Maybe a potential head and shoulder there on the 1 above VWAP. Left head, right. Pop the fade the pop into the drop. That might be the right there. So just a slice maybe. We'll see. So it's going to come down to that level. It's going to come down to a lot of things in this territory. The VWAP is there. This key level is there. We're about to get the flip of the hourly candle. So just keep in mind, any break above this high is a break above this hourly candle's high. Okay, any break above that high is going to be a break of that hourly candle's high. Okay. So do we go head and shoulder and start pushing back to the downside? With a confirmed close. In this case, you want to see the Qs start to slide. You want to see the VIX start to spike. Or do we just hold, okay, and continue to push to 689.45? $1 million question. $1 million question. So what are we thinking, chat on YouTube? What are we thinking? Drop, pop. Watching this close, so I don't want to ride it back down to the 20-day out. That's enough intensity for me. Beautiful, 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 beautiful job, hero. Way to get in, get out, get in, get out. Beautiful. The intensity, it's real, guys. Intensity is real. Slight pullback on IW on the 1 and the 5. I can see that after making those all-time highs. IW, I mean, outperforming everything. IW is outperforming everything. Okay, IW, small caps are in the lead. Because typically small caps are risk on. Right, that's why Bitcoin in 2025 has kind of trying to identify itself. It used to be the go-to risk-on measure, risk-on, risk-off measure, along with small caps. Now what it's looking like is small caps, somewhat of safety, right? And then when there's uncertainty, they get out of the queues. So that dynamic always changes. That's ever changing, right? But it's every year it's different. Every quarter is different. No rotation cycle is always the same. And that's the exciting part. When you look at it from the macro perspective, it's like you're trying to solve this puzzle constantly, right? You're trying to solve the puzzle constantly. And no one has it solved. No one has it solved. You can solve it for a certain period of time, but it's not like you solve the puzzle once and the puzzle remains the same. Okay? So every day it's a new puzzle. Every hour it's a new puzzle. All right? Every hour it's a new puzzle. If this support breaks, we can start to see a crack. A nice little slide to the downside. Failed hold above VWAP. Waves waving back to downside. If we can hold below 686.66, we can see a nice little slide. $686.66. Retrace reject. I'm hoping to take that retrace reject. That view up can hold. I want to see if I can get a retrace reject here. If we start to fade back lower, VIX continues to spike. I'm open to it. Just needs to get that confirmation. If it just completely bounces, there's nothing for me there. Okay. So I wanted to see if we're going to retrace reject instead of a bounce. What does it decide to do? It decides to bounce, so we're not in the clear fully. So if this broke, retrace reject, it wicked, I'll take it short. So in this case, the fact that I just exercised a little bit of patience and had a criteria that I want a price to fulfill, okay, saved me a unit of risk. If I just went in, I'd probably just get stopped out. Okay. All right, so nice response. Nice response. Is it enough though? That's the question. Is it enough? Is it enough? New hourly candle. Okay, so we're inside on the hour. Inside on the hour now, like we just talked about, right, guys? So we're inside on the hour. If we break below these lows before taking out that hourly candle's highs, that 15-minute reversal is on deck. Back to the downside. So not reversing this initial move, but reversing that 30-minute stretch of buying. If we get above these highs, the party to the upside resumes. Okay, what does that look like on the 5? That's what it looks like on the 5. All right, so we triggered these highs. That means we're going to continue to push on the hourly. If you're waiting for PMH, if there's a dash from PMH, we see that sometimes, right, cross country. We go from PMH to PML back to PMH, or vice versa. Okay. So still keeping a close eye on this breakdown. I want to see how that 5-minute candle closes. If it turns into a shooter to the downside, I'll short it to the downside with those puts. I'll use those candles high, that last high, as my risk. But I want to clear break and close. That 5-minute candle is 2 minutes left. In that case, I want to see some signs of synchronized selling. Ideally, I want the VIX to continue to push higher. I don't want the VIX to start breaking down, okay? I want it to push higher, so no flag break on the VIX. If it breaks here, that tells us that this is ready for breakout. All right? So I'm just looking for a close below this key level. Chop, chop, chop. Chop, chop, chop. Okay, let's see if we get that continued push. If you're done for the day, put done in the chat. If you are done for the day, put done in the chat. All right. There's 101 reasons to be done if you caught that last push. If you caught that last idea, there's 101 reasons to be done. You don't want to be caught up in the give back hour. All right. And this is hard fought. This wasn't an easy ride. It was a hard fought. Every penny was earned. All right, so it looks like we're bouncing here. So if we're in this zone, all right, if we're stuck between this area, chop, chop, chop. So what that means is, if we get that break, you're on confirmation of the break. If you're going to get a break below this, you're on a confirmation. Or else it's just going to continue to chop around. Okay, it's going to continue to chop around. It's going to continue to chop around. Let's get the likes up on YouTube, guys. Make sure to like the video. Make sure to subscribe. Make sure to subscribe. What do we think of strikers? Lots of things here. VWAP, yesterday's highs, 1 hour 13 MA, strong support, Trump pump, PML, a lot of things in that territory. You're absolutely right, JB. A lot of things. If the VIX starts to break down, you can make a case for breakout. Let's see what the Qs do here. New 5-minute candle as well. If the Qs continue to push, the Dow's already directional. That might be the lift SPY needs. Take this off. That's no longer valid. Main thing is getting above these highs. 689.45. 689.45. Decisively. There goes the Qs. There goes the Dow. IW. Little flaggish. Not the cleanest flag, but flaggish. Nice pause in the action. Nice pause in the action. So far the chat on YouTube is leaning 75% bullish. So overly bullish in the chat. Let's see if we have that continued break here. Continued break is necessary. Continued break is necessary. We have the retest of that 15-minute, 5-minute orb as well. So this is two things in one. Two things in one. Level 2 starting to speed up. Time and sale starting to speed up. Some massive sells coming in. Let that clear out. Look at that. Look at that. Double top rejection off those highs. So we're just range bound in this territory. We're using the brick wall trampoline type of scenario. Nice bounce off 1570 on VIX. This is here to test your patience, guys. It's here to test your patience. If you're green, make sure to stay clean. If you're green, stay clean. If you are green, stay clean. All right, that was a nice opportunity earlier. So same thing, when it comes into these lows, you don't want it to grab it and go. You want it to clearly break it. Because right now, in this juncture, since the beginning of second shift, we're seeing some consolidation. We're seeing brick wall trampoline scenario. Okay? Brick wall trampoline type of scenario. If you're not familiar with brick wall trampoline, that simply means treat support as support, treat resistance as resistance until proven otherwise. Okay, you're going to treat those things accordingly until proven otherwise. Let's get the likes up, guys. 50 likes, we'll do the giveaway. We will do the giveaway, 50 likes. Does it finally break here? Does it finally break? Studying the charts. Okay, 13 MA on reclaim. All EMAs. Reclaim VWAP and become support. 68990. Double top. So if you're playing that break and hold, you can either play the break and hold or the retest. If you like to play the break, take a look at the volume, take a look at the environmental conditions. You want to see a strong, decisive break. You don't want price to stroll into resistance, okay, thinking it's going to break. You want it to knock the doors, break the walls, blast past it. Okay, do I have volume on this chart? No, I don't. Let me get the volume here as well. Let's get the volume here. Okay, you want the volume to start increasing. You want the green bars to start increasing. You want the green bars to start increasing and continue to increase. If not, just another rejection. So this is scalper's range, right? Scalper's paradise. Scalper's paradise. See if we get the nice break and hold decisively. There we go. There we go. We are directional on the hourly now. We have officially triggered the hourly candle. We've triggered the hourly candle. So the hourly is directional. The 4-hour candle is directional. All those candles are directional. If we continue to push 690s next, I do like how we had that close above it, that candle with this engulfer. See if you can dip into that engulfing candle to take this ride to 690. Okay, I'll take it there. See if I can get filled. Okay, I'm in. Want that level to hold. Our room is into 690. Want this engulfing candle to hold. Based off of that break, if it turns into a trap, that gets stopped out. So you get that continued push. So betting on that, we're creating separation away from that box. Betting on separation away from the box. Kind of got filled up there. So I needed to move to see some green. Okay. Go, go, go. Didn't get the best fill. Go, go, go. Okay. Up 4. So think of it like this. By the time I got filled, it's like up here. Right. So if I got filled in this territory, but it would already be close to double digits. Okay, so see if that continue push. New 5-minute candle here. I want it to continue. I want the show to continue. Okay, I want it to continue. Let me put my NC here. Relatively stay above there. I'll give it a soft risk. Okay, go, go, go. Contracts are not moving as nice, but we'll deal with it. Hit that target already. Up 6. So now I needed to go beyond the target, but that is the target to get that double digit. And that target is that daily open. So let me take a look at what the indexes are doing. I like how the SPY continues to dump. Okay. Go, go, go. There we go. There we go. Did see 9. That's why entry is so critical. So if you did get double digits, you can TP there. Probably got a rejection there. We'll see. Don't want that to turn into a hammer. We have a brick wall up there. Conditions still look, Qs still look good. Unless we go shooter on the 5 and completely collapse. I'll see if I can sit through a little bit. With that break. Okay, shooter on the 5 forming here. So we know we're going to get some pushback, right? So right here, I know I'm going to get some pushback. Okay, so I did see 9 in that territory. If I got a better entry, maybe I can get a little bit more. But I'm willing to risk it as long as it stays above 68950, 68954. If it falls back below that, then I know that that rejection has a lot of momentum. Okay, I'm going to close it there. Okay, so stop that for 12. So the opportunity was from here to there. Might have wanted a little bit more. And then, of course, it rejects and pushes back the downside. As soon as it started to break this, now I know, hey, you know what? This is a massive, massive drop. I want no parts of it. Okay, I want no parts of it. So stopped out there. So again, this is a massive, we're seeing some crazy moves, guys. We're seeing some crazy moves to say the least. All right, so the biggest takeaway is when you have that runway, that's your room to operate. That's your room to operate. At least taking off a majority. Now that 5-minute candle looks as bearish as can be. That 5-minute candle looks as bearish as can be. And now we're back in the jaws of that range. Look at this, guys. We're still moving to 84 cents per 5-minute candle. All right. It's almost like they're ensuring you either take profit or you either get wiped out. Right? So this conditions is for the disciplined traders. Okay, disciplined traders. So I won't fully buy that breakdown until we get below this green box. Once we get below that, then okay, you know what? I know that rejection was aggressive. See if the Qs can start course correcting. See if the Qs can start course correcting here. Just a complete shakeout. Just a complete shake and bake. Back in the green box. For this to continue, it needs to get back above those highs. If we can dip one more time into it, might have to re-engage. So came into it, rejected, dumped, got the liquidity it needed, came into the jaws this green, buy block, now starting to push. Now the question becomes, does it have enough? Does it have enough now? Does it have enough now? Does it have enough now? Does it have enough now is the main question here. Does it have enough? Nice day. 2 trades, 25%, 65%. That should be enough. Have an awesome day. Yeah, if you guys are done, guys, be done. From this point on, if you're still trading, just use very little size or be done. Okay. So I got pump fake twice. Pump fake on SPY, pump fake on IW. Did give us 9% for majority. If the entry was a little better, of course, that's a if. We don't live in the if. Maybe I can sit through it, but I'm okay with that stop. Okay, now we're really starting to create separation. Right, what they're doing is they're punishing the ones that take the continuation. So you have to apply the inverse logic. You almost have to identify that we're moving to the upside, and then look for pops off drops. Look for pops off drops. All right, hourly candle is as strong as can be. We know we're directional. Right, but it's just finding a way to engage that candle. You can engage it in this territory, of course, into that PMH. So let's see if we get one more drop. 30-minute is bullish. Okay, very bullish on the 30. You have the hourly is bullish. 15 is bullish. We're all directional. It's going to really start looking bullish. So at least pull back. See if we get one more rejection. One more rejection, dip back into it. And we'll probably... How many trades is that so far, guys? 3, 4. Okay, probably have one or two more left in the tank. Okay. Do we get that break? If that leads to one more drop, okay, I'll look to catch the pop on the drop. Catch the pop on the drop. If it leads to a break, I gotta let it go. I gotta let it go. You gotta let it go. So we're 7 minutes away from the conclusion of second shift. Conclusion of second shift, 7 minutes away. PMH is around the corner. PMH is at 690.31. PMH is at 690.31. VIX continues to fall off a cliff. Continues to drop. POC 689.72. We're right at POC. We're trading above VWAP. So the only thing really stopping us now is the daily open. So we're back at daily open like we never left. We are back at daily open like we never left. And look at that massive wick. Look at that massive wick. We got all the way into 686. So this entry of that key zone was as good as it gets. Or that bounce zone. Level 2 is flashing a lot of selling pressure. Time and sale flashing a lot of selling pressure here. Look at it speed up. See if they clear the selling and then pump it. Like they did earlier. They're right here, it did the same thing. So cleared and then pumped and then broke. Two pump fakes today. Hourly is as bullish as can be. Hourly is as bullish as can be. We know this is the 5 minute, of course, on an hourly scale, because these levels are the hourly. That's the hourly breaker. On the 15, this is what we're looking like. 15 is already directional. 30, 10, right? 5. So let's see if we get 5 minutes of selling and then a hammer reversal back the upside. That'll be my next way to engage. So 5 minutes of selling, similar to this, similar to the series here, and then a reversal back the upside. So look at that entry, guys. Look at that entry. It only makes sense in hindsight. Right, so this is the area we can see where a lot of things were converging. Right, separation, major separation took place. Was it easy? No. It was not easy at all. But it did happen. It did happen. $690s right there. 690s right there, guys. Let's go to the game plan chart. If you want to look for a chart that gives you the most amount of FOMO, it's the game plan chart. All right, so we're at 690 right now. So earlier we said when we get to 690, that's going to open the door for potential push into the session highs. All right, so if you're waiting for 690, 690 is quickly approaching. If you're waiting for 690, 690 is quickly approaching. If you're waiting for 690, it's quickly approaching. We're back above all those key EMAs. Just be mindful of the sell block. We've been running to the upside nicely. We're above that daily open now. We're above that daily open. So we rejected here to clear out, and then now we pump. We're about to wrap up the shift. So I don't know if it's just me or not, but today seems like a long day. All right, it's only 2 shifts. We're 2 shifts in. We're seeing a nice little push. First shift is about to wrap up. So second shift took 1 trade. Did see some green on the trade. Got stopped out for -12. So again on the chart, right on the chart, wrong on the execution. What are ways to mitigate it? Right, re-engage. You can potentially re-engage, of course. That's always there. But I do like this entry. I mean, this is a good entry. 690. So we're officially in second shift here. So now, does the same kind of thing take place? We break above a certain level, we reject for a few minutes, when we course correct. Reject followed by course correct. So far, doji on the day. So second shift is in the books. So that's 690. Does it lead us into session highs, or does it lead us back down into 689.45? And that will lead us right into I think that support, very steep support there. So you gotta at least get that measure. Okay. If you're playing the trap between 690.05 to PMH, 24-cent window. If you're playing the trap, that's your nice little trap area there. So we're starting to sell off on the 15 here. See if you get below POC 689.72. 689.72. Make sure to like the video, guys. Make sure to subscribe on YouTube. Let's get the likes up if you're interested in joining our community. All the links are pinned in the description. Take advantage of the code WHOP. Save 25% off your first month. Link is also pinned in the chat. Thanks for talking us through SPY. Very helpful, absolutely. Yeah, SPY, we know SPY like the back of our hand. When you trade one ticker, you eventually start to know like the back of your hand. And your only hurdle, or your primary hurdle, just becomes execution and things between the ears. Managing your emotions, executions, the psychology of things, risk management, that's what it becomes. That cup and handle is still forming. Right, if you have the top of the cup there, or if you have a cup like that, you can argue this is the handle. But if you have just a traditional cup and handle, the handle's all the way up there. We're headed to PMH. So this graph does look appealing. Counter trend trading. This does look very appealing to me. Does look very appealing to me. All right, let's get the likes up, guys. Make sure to like the video. Make sure to subscribe. We'll talk about the ways to join our community, some of the features of our community, and you get to take advantage of all the resources in the Discord. My primary way of teaching, educating, mentoring, whatever you want to call it, is through live trading and through Q&A. Right, I do have a course available in the Discord, self-paced course you can take advantage of as well. But the primary way, the best way to teach, in my opinion, is through real action, walking through the real emotions. Right? And it's easier said than done, but there is some difficulty to it. You have to get used to it. But it's tremendously made me a better trader as well. By walking through the things and helping others, it has tremendously made just 10x'd my ability to trade. It's through the roof, right? More discipline, more refined, more calm. And we've been doing this. You guys have been walking alongside the entire journey. Over 200 episodes. Right? The things we've been trading since episode 1 to 5 to all the episodes now, it's the same thing. The same setups, same system. The things that change are where price opens up, the price of SPY, and the different things we feel, and how well do we manage our risk, how well do we manage our emotions, right? When we're in trades, when we're in between trades, those are the things that are variable. Everything else with this system is static. Right? Once you have a good understanding of the technicals, you're not getting overly technical. Right? Sometimes that's my biggest challenge is sometimes being overly technical. And you shake yourself out of a good position. All right? So those are things you deal with every day as a trader. Everyone deals with different things at different stages, but you're always going to be dealing with something. There's not going to be a time where there's nothing for you to deal with. If you are at that particular time, right, that might be a red flag, and you're not seeing some holes that you need to be addressing, and you don't want to lose big or go through something dramatic for those holes to be uncovered. Right, so again, that's the kind of community we're leading, that's the kind of community we're building, and it's awesome to see, especially the people that have been with us from the beginning, that have been with us for multiple months, find that success, right? Taking steps in the right direction. If we can grab those highs, 690.05. I might counter this and go back to downside. Now, so far we did take 4 trades. Stopped out here. Did see a little bit of green, but still got stopped out. Took some 2 trades here that worked out beautifully, and IWM got stopped out there. So even IWM, nice little pump fake. So I'm not going to sit here and say, hey, you know what, we were right, and not discount the fact that the execution was wrong. Right. So I have no problem in saying that I was wrong, even though the chart says I'm right. All right. We need to stop doing that as traders, because it's almost like you're making excuses to say you were right. It's okay to be wrong. You guys know the motto, don't be wrong for long. All right, don't be wrong for long. That's the nature of the industry we're in. In trading, you can be right in your idea. You can be right in spotting the opportunity and the contract selection. But if you're wrong on the execution and the timing, all right, you're going to be wrong. Everything is wrong. All right, so this especially scalping is all about precision. Precision, timing, and execution. All right, these small details make the difference. Right, and those small details can determine, okay, if you're up all of this or if you get stopped out 12%. So instead of justifying to myself, hey George, why don't you just increase your stop to 30%? So you can sit through this. I'm not going to adjust any rules because of one occurrence. I'm just going to say, hey, what are some ways I can let my stop absorb this? And one of the ways is, of course, more precision. Or scale into the position. We haven't been doing a lot of scaling into positions because I don't want you guys, there's a fine line between scaling into position and adding to losers. And when you start scaling to positions, especially if you're not taught properly, right, you're not going to know the difference between adding to a loser and scaling into position. Right, there are ways to do it, but you're walking a fine line. Right, that's why I kind of gravitate away from doing that, right, and I have that one shot, one kill mindset, right? But scaling into the position for the ones who know how to do it and know how to walk that fine line is a great way to mitigate it as well. If you don't know how to walk that fine line between scaling into position and adding to a loser, if you can't define that line very clearly, I highly suggest don't even think about scaling. So what I mean by scaling to position is, say if I'm taking the calls here, if I'm intending to take 20 calls, I take 5 maybe here. It starts to push, but I want that full break. Starts to pull them, I take another 5 maybe here, another 5 there, another 5 there, so on and so forth. So you're more interested in capturing the move, right, and building a position over time, right? But that can easily lead to, the downfall is, of course, adding to a loser. So again, I'm going to say it again, you have to draw that fine line if you're going to go down that road. And I would highly suggest maybe practicing first, having that clear plan. Okay, so that's the ways. Nice little pattern here. That's things I would do to improve it from my lens, for my system. So the big takeaway is, don't allow a couple occurrences to shift your whole system. Okay, don't allow a couple of occurrences to shift your whole system. Okay, now we're above those highs. See if we can hold. Once we pass this window, we're in the clear. If we start to break back to the downside, again, you're shorting it in the face of, you're catching a moving train. So super high risk endeavor. Super high risk endeavor. But I am interested up there. Back to the downside. It is after 12 o'clock, guys. I was getting close to 12 o'clock, so sizing down if you're still trading wouldn't be a bad idea. If we can go shooter here, grab those highs. VIX just needs to wake up, see what the Qs are doing. I'll take that to the downside. Break those lows, get back below 690. What is the danger? Of course, the danger is you're shorting into, you're shorting a trend, strong trend. So you get that hole below 690. Risk would be the top of that candle, 690.22. Okay, I'll take it right there. Super high risk endeavor here. I don't want price to get back above 690.31. Soft area, of course, those new highs. And we're right at PMH here. We're right at PMH as well. We're right at PMH. We are right at PMH. Very small size here. Because if it goes, it can start to go. If it doesn't go, then it's like a paper cut. But the primary thing now is we need to get it below 690. Get below 690 before getting above 690.22. And maybe start putting some pressure on this nice support. Okay, so this is counter trend trading, going against the trend. 690 break is needed. 690 break is needed. We're probably colliding into the first wave. There's 5 minutes, 44 seconds left. So in the next 40 seconds or so, the closer we can get priced to 690, the better. Right, for a potential shooter on the 5. Again, still very early. Right, so the closer we can get to 690, the better it starts to look for that next 5 minute candle. Okay. The better it starts to look. Keep in mind, we have a somewhat massive buy block here as well. If we take out these highs, we continue to push higher. That'll probably be the sign that we're continuing to push. So this would be an area where I don't want to see price close back above. New 5 minute candle, new 15 minute candle. Starting to push here, down 7, down 8. Down 9. About to get stopped. Okay, let's see if it grabs those highs once again. So that entire area, okay, is that trap box. Well, if we can clear that 690.31, then it clears that trap. We're above PMH 690.07. We're above PMH 690.07. Down 8, down 9. About to get stopped here. Moment of truth. That 5 minute candle continues to push. We're starting to see a little bit of a shooter on the VIX. VIX continues to push to the downside. So all this is counter. We're countering everything. Countering everything. I'm going to close right there. All right, let's get stopped out there for 11. Okay, so again, couldn't get that pushback below it. Stopped out there. On that note, that'll be the last trade of the day. And watch it completely collapse now. All right, last trade of the day. Stopped out 11. Done for the day, 4 for 4. What a day. If you're following your stops, don't be too discouraged. Okay, if you're following your stops, 4 for 4, 3 for 3, whatever it is, guys, don't be too discouraged. Now we're above PMH. At 690, it did act as a nice bounce. Time to buy puts, George. Yeah, I gave the puts a shot there. Knowing that standing in front of a moving train, and if I'm seeing the moving train getting closer and closer and closer, and it's not slowing down, all right, just got to step out of the way. Okay, just got to step out of the way. Let the train go. I have to respect the fact that there's a push to the upside. Okay. Okay. The trap is still in play. But again, it's beyond that risk. And that's the thing. When you're looking at price, after you get stopped out, it looks very, very appealing. You want to keep going, you want to keep going, you want to keep going. All right, but have some checks and balances for the second attempt. Have a host of things you want to see before re-engaging. So when I went the first time, I'm just using that break at that level. I know the VIX is going against me, the Qs are going against me, the time frames are going against me. So unless those things shift, right, there isn't any reason to re-engage. That's just more of forcing something to take place. All right, forcing something to take place. Okay. Last two trades. Stopped out. First two trades worked out. Last two trades stopped out. If we can break back below PML, that'd be great. If we break back below PML, that'd be great. But I will be done for the day here. All right, so for the rest of the day, we'll just provide commentary. We'll see where this thing goes. Massive recovery. By the bulls. Massive recovery by the bulls. All right, the bulls were able to drive this thing back up from those lows all the way back at those highs and bounce off of this critical area. Bounce off this critical area. Okay, so that's where we are now. Any questions? Okay, I'm going to refill the coffee. Be right back. We'll do the chart request. If you guys have any questions, we'll go over that. And we'll see where SPY ends up. Of course, we have session highs at 690.67. Nice clean trend to the upside. If you are on board for that trend, 1 minute wave riders, that PMH third wave is available. Most of you are done for the day. Most of you are done for the day. So if you're done, sit back, relax, share your charts. Okay, see if we can start this slide here at least. So in this case, if you're waiting for the official Q, okay, at least get that shooter on the 5. Okay, that's what you need. That's a good stop here. Right, that's why I don't want to disrespect. Okay. Look at that, the trickery. So someone takes that break, automatically in drawdown. Someone takes that break, automatically in drawdown. Now the VIX is starting to wake up slightly. Starting to wake up slightly. Okay, starting to wake up slightly. Is this the way we go to the downside? Or is that just a pump fake? Get the bears excited and then drop it. Or get the bears excited to the downside and then continue to pump it. So second shift highs are all the way up here. Second shift highs. We're all the way up there. Pay close attention to that 5-minute candle. You want to see a nice shooter above that 5-minute candle. Nice shooter. You want it to hold for the next minute. You don't want it to make back ground above those highs. This is only if you're short. If you're long, you're welcoming a little bit of selling. Okay, the shallowest bounce is off 690. So you're welcoming that selling pressure. You're welcoming that selling. Look at that candle, guys. Very, very midday action. Good thing most of you got active during the first couple hours. So that 690.12 will be critical for the next 12 seconds. We got a shooter on the 5-minute. Shooter on the 5-minute. If we break below it, that supports that continued break. If we break below 690.05, that would be us being back below second shift highs. Okay, new 5-minute candle here. We break below those lows, we start to push. Break below those lows, we start to push. 690.05 will be critical. So we're already directional on the 5 now. So again, a little bit of mistiming this week on my end. Okay, on my end, a little bit of mistiming. Okay, a little mistiming there. And what a break. So just being a little more patient, right? So this trap zone, I'm already in it without even being without being patient. So finding a better entry is the theme of the week. So if we can hold below 690, has room to drop all the way into that daily open. No buyers there, no takers there. So we can see a continued slide. We're starting to see the VIX pick up. We're starting to see the Qs pick up. Okay, that 5-minute candle has lots of selling. Hold below 690. This is the last, the key battleground for the bulls here. Can they hold that daily open? If not, this opens the door to 689.45. Opens the door to 689.45. So the bulls are using that daily open. But is it enough? The Qs are still selling off at 5-minute candle. So waiting. The theme for me is, guys, the patience. Right, patience has been the name of the game this week. I think I've been a little impatient. Right. Waiting for that break. Once it breaks, it continues. Is the best protocol. Okay, just being patient, waiting for the 5 to develop. Even waiting for a nice shooter like this. This is the trap zone. So hopefully you guys are learning a lot on navigating those traps, on finding those entries, being patient, key levels, key zones, right? A lot of things go into a singular trade. Okay. So despite the action, this is looking like a magnet type of day. An exaggerated magnet type of day, but it's looking like that. If we can't hold above this, all the variables remain true. VIX pointing north. Qs continue to sell. There's more selling left on that 5-minute. There's more selling left on that 5-minute. More selling left on the 5-minute. Okay, more selling left. You don't catch that? Anyone catch that? Good news. I got a comment in the chat. Good news should mean 693 is possible. The market does not care. What I think absolutely in the market. Okay, the market just uses the news, okay, as an excuse to do what it needs to do. Or it uses catalyst as fuel. Right? So the market has, just think of it like this. The market is just looking for excuses to do a set of things. All right. So if it doesn't have those things to make it to react off of, it's going to do what it traditionally does. It's going to be range bound. It's going to provide you those textbook setups if you're able to find those setups. It's going to go through the process of price discovery. As soon as it gets some sort of catalyst, some sort of news, right? It uses that catalyst, it uses that news to rebalance price, to make it more efficient. So it may expand to a certain level, it may break into a certain level, and then go back to what it was doing. So news and catalysts are just extra fuel, right? It's just extra fuel. It's just another reason for the market to get to where it needs to get to. Look at that, guys. Look at that. Same thing. Couple of setups. Today, patience is the name of the game. Granted, I'm using less size up here. The fact that it was a shooter, the fact that it was a reversal midday. But, all right, this could be, those contracts are now $1.26. $1.26. We had them at 94 cents. So 30 bucks per contract, 40 bucks per contract. All right, so we had them at 85 cents. We got them at 85 cents, then they're $1.46. And where does it bounce off of? 689.45. So buyers are trying to pick it back up. So they're using anything to get it back to where it was. Right? So now if we take a look at the 5 real quick. Take a look at the 5 real quick. Take a look at the 5 real quick. So now, on the hourly, we're still bullish. Okay, on the hourly, we're still bullish. So the hourly is not up for grabs quite yet. The hourly is still bullish. We're still trending to the upside. We cannot refute that. That push lower, okay, was just, we got our initial low here, low of the day. We got our next low here. Okay, we got a higher low. We got our next low here, which looks to be a higher low. So this is when it started. All right. And we got our high here, which is a high. That's fine. But you may say, hey, you know what? How about this high? You're not taking into consideration this high. That's fine, but I'll show you. Okay, this high. Okay, we got this high. We got a high here. But the fact that we couldn't get a lower low after this low, right, tells us we're moving in the other direction now. Okay, now we're using this channel, okay, to drive us back the upside. So now let's see if this higher low can lead us into a higher high and a higher session high. So if you're a bull, your job becomes where's the next high, where's the next lower high. So you have to welcome the selling. Okay? You have to be a good host. All right? The selling, the bears are a guest in your home if you're a bull. Don't antagonize the bears. You need the bears to drop price into your pocket, which is the higher low. So you welcome them in. And then when they leave, okay, you have a chance. On the other side, if you're a bull, right, or if you're a bear, you have to respect. Okay, in an uptrend, you have to respect that you're in someone else's house. You're a guest. If you're a bear in an uptrend, you're a guest. So you need to follow house rules. You can't just do whatever you want. If the entire trend changes, now the bulls are the guests in your home. Okay, so that's how you understand it. So you need some level of selling in an uptrend, okay, to get those contracts cheaper so you can ride them. The market is punishing, or the market is sporadic in rewarding breakouts. Every break, look at the 5-minute candle, guys. The deceiving thing is it looks like every break works. This is why, to some degree, I'm not a big proponent of backtesting. Backtesting is good to a certain extent. But when you're doing your backtesting, you're not getting a good feel. It's not real time. So I'm not saying backtesting is bad, but I'm saying it's not going to give you the full picture. Okay? Half the picture is better than no picture, but it's not going to give you the best picture. It's not going to give you the real time picture. Because when we look at it here, we can say, hey, you know what? This high or low in comparison to this low, yeah, it just happened. No. There's a lot of contention. There's one thing to do your analysis when you're in a position, and another thing to do analysis when you're not in a position. When you have a horse in the race, and you don't have a horse in the race. All right, so don't let that deceive you. A lot of people deceive you because there's no horse in the race. They can just say buy calls here, and then you'll end up here. If you had a horse in the race, you know what took place here. Especially if you had anything under the weeklies. So it wasn't just we teleported up here. It's not just buy it there, sell it here, sell it there. All right, so the best thing to do instead of back testing is to do forward testing. Is to take your strategy and is to apply it on the chart in real time. Okay, you can use TradingView to do it. You can paper trade through TradingView. And spend a week mentally taking those trades on the chart with real data. Because now you can't have a bias coming into it. You can't say, hey, since it worked and you're doing back testing, you can't cherry pick. Okay, it's live. You can't cherry pick when it's live. All right? You can't cherry pick when it's live. So no one knows what happens here. The money is made here, guys. The money is made in the right side of the chart. This is where the money is made. The money's not made on here. All right, this is in the rear view. It's almost like trying to drive forward looking in the rear view. All right, just imagine if your windshield was a giant rear view mirror. How can you drive forward? So all you need to do is keep the information from here, right? The past information to give you a little bit of guidance to map out some levels, but don't over-index on it and then use those levels to make decisions based on what you're seeing in real time. There's a reason why the windshield is massive and the rear view is tiny. Okay, so when you're driving, your primary focus is what's ahead of you. 90% of it, 95% of it is what's ahead of you. Maybe 5% of it is what's behind you. and what's to the side of you. Right? So with back testing, the issue is everyone is looking in the rear view and trying to drive forward. Okay, so with all the trading content out there, it's all in hindsight. It's cherry-picked hindsight. So it can only help you to a certain extent. You can only digest so much of it. At some point in time, you're going to have to do it on your own and start building your system. Okay, so very, very important for us to understand that, and of course, skyrocket there. So moving forward, those key zones, right, those bounce zones, like today. All right, look at that. That opportunity is not coming back. So if you're gonna buy call, if you're buying calls here, you're not paying the same price you paid here. Maybe by the end of the day, you will pay the same price because they lost so much value, but you have no time. Time is against you. All right, so the 5 minute has given us some good reads. Okay, so now, okay. Coming to this territory. Last time we came here, we got out of there. We got a nice break out with an engulfing candle. We come back into it. And we use this as the fuel we need to get back above, to get back into the range we were in earlier. If you thought 2025 was hard, 2026, January, if this is a foreshadow of the year, which sometimes January is, as far as the action is concerned, all right, you need to be on your A game in 2026. So A game doesn't mean have some secret setup, have some quant strategy. No. A game means make sure you have things in place so you're following your rules, you're taking your profits, you're managing your risk, you're not over trading. Because the opportunities are there. But they come with a cost. It's you have to take advantage. If you're not taking advantage, you're not following those rules. It's either you're doing very well or terribly. That's the kind of conditions we're in. Okay? So that's the kind of conditions we're in. Now we're above those highs. That's we just needed to make a nice little stop here. Fuel stop. Nice bounce on the 5. Off the EMAs, off the POC. So the 5 is giving us some good reads past this week. So I'll probably just incorporate a little more of the 5 to just be a little more patient. Okay, so this did feed the bears. You welcome the bears into your house. You're a very nice host. All right, and then when they leave, you do what you need to do. They give you an opportunity. Netflix, I didn't even check on Netflix. I had an alert on Netflix. How we doing, guys? There's a lot of Discord. Nobody with proven success in Matrix Attract should be trading with live account. You shouldn't be paper trading for at least a few months with proven consistency. Profit before going live. There's so much to learn regarding trading. Even once you learn those basics, it will still come down to discipline. Absolutely. So please practice on paper 100%, guys. Right? Don't be in a rush to go out there. Okay? Don't be in a rush to go out there. There's no overnight secrets of sex, capital preservation over profits will assure you'll be able to 100%. All right, I couldn't have said it better myself. So thank you. Very wise words from our hero. How do I like the whole thing? 100%. All right, so of course in the trading space everyone's operating in, guys, is predatory. What I mean by that is there's a low barrier of entry. All right, think of it like this. We're going to have to go to our diagram. If this is the trading space, okay, anybody, when there's a low barrier to entry in any industry, what that means is, okay, this is the industry, trading. All right, this is trading, the whole space, as a total. This is you, or this is me. We're looking to dive into this field. To get into this field, the barrier of entry is very low. Okay. What is the requirement? The requirement is basically you have to be 18 and put money in an account. That's basically it. Especially with options, you don't fall. There's no PDT with options. Okay, so anybody can play. Whenever you are playing a game where there's low barrier of entry, what happens is the success rate is very low. Not because of the industry itself, because of the sheer volume of people that are entering the industry. The reason why it's a low success rate in trading is because it's a low barrier of entry. Anybody can play. All right, so now since anybody can play, this is trading in the trading itself. There's another industry within the trading industry, okay, which is here. It's I will show you how to trade, or I will provide a service for you to better participate in this entry, to participate in this space. So you're here. So within the space, there's another space within the trading industry. There's another subgroup, another industry, which is of course the education, the courses, and all that good stuff. So I have no problem. Of course, I have my own course, I have my own community. I have no problem with anyone having their own commuting course. But you have to keep everything. You have to let people know what they're getting into. You have to give them the best service. Okay, you have to do things the right way, just like trading. So in this space, in the education, trading, content space, their goal is to make this industry seem easier than it is. So on top of that, there's more people. So the natural path is go here, then go here. Some people's path is go here directly. They get into the space, they have a hard time because they thought it was easier, then they go here. Then they go back here. Right? So the nature of the industry is low barrier. So it doesn't mean you can't be successful. But you can't be doing what everyone else is doing. The reason why, what I mean by that is everyone is just coming in, putting money in the account, and then just seeing what happens. That's how I got into it as well in the very beginning. Right? That's how a lot of us got into it as well. But there's something called evolution. You need to evolve as a trader. You need to get better. If you want to take it serious, you have to treat it like a job. So once you start separating yourself from the crowd, once you are in, and you start treating it with a certain level of seriousness, you're not rushing the process. Okay? You understand that it takes years. It's a matter of if. It's a matter of when, not if. But most of the people are convinced here, convinced there. They're going back and forth. They're going back and forth, back and forth, back and forth. And all the stuff here, the education space tells you everything is easy. All you need to do is do this one thing. 3 steps to become a trillionaire. Okay? 3 steps to become a trillionaire. Okay? How I went from living under a bridge to on top of a penthouse. We know the nature of the content. This is content creation, guys. Anything to get your attention. Everyone is bidding for attention. The attention wars. If you're serious about the space, you're going to have to respect the industry itself. It's the biggest industry in the world. It's one of the biggest, if not the biggest industry. Study it like a subject. Okay, become a student. Study the industry. Right? Have a certain level of seriousness. Understand that there's no overnight success, just like anything else. That'll give you the best chance, okay, of beating 90%. And even if it means, hey, day trading might not be your thing, which is I understand. You need some exposure to this. Maybe it's long term. Maybe it's dollar cost averaging. You need some sort of exposure to the market. You need some sort of exposure to the market. All right, think of cash as oxygen. Every day, you're running out of oxygen. Every day, you are working to get more oxygen. But when you're storing the oxygen, your oxygen tanks have leaks, which is inflation. So you need to have something that can patch up your oxygen tanks you're storing, aka money, to keep you alive, okay? And that's the market. So that's the nature of anything low barrier to entry. They want to make everyone get in. They want to make it seem like it's very easy. All right, but there's a there's a dark side to this space, and things can get very ugly, especially if you have a certain type of personality trait. If you have an addictive personality, if you have different traits, or if you're trading out of desperation, if some things outside of trading in your life are out of balance, those things will lead you to go on tilt. So before you even get into that, you have to just treat the space with respect. Just like if you want to become a professional basketball player, or a professional, you want to be a doctor, you want to be a dentist, right? It requires years and years and years and years and years. All right, so I know we click buttons, we talk about levels, things happen, but for me, I already put 10,000 hours plus. All right, I already put the time in. All right, hours and hours, to the point where I had to sacrifice my vision. I'm not saying that I'm blind, but I do wear prescription glasses, because that's the sacrifice I'm willing to make. I need to figure this out by any means necessary. It's a must. Right? You need to figure it. If you have that kind of mentality, you give yourself some grace. Give yourself some time to operate. Give yourself some time to learn. Don't get confused with the microwavable information. You'll give yourself a shot. Okay, there's no guarantees on this planet. Okay? But you'll give yourself a shot. All human beings, all they need is a shot. That's it. You get a shot, you get an opportunity. What you do with the opportunity is completely up to you. All right, so I'm not going to sit here and say, it's easy. All you got to do is click buttons. It's not. All right, that's the whole point of why we're educating on YouTube. That's the whole point of the community. That's the whole point of why we're just so focused on process. The boring stuff. That's the whole point. Right? Because the people who really want to do it, they'll gravitate towards this content. The people that don't want to do it, they'll say it's boring. Right? They're going to continue to chase something that's more appealing and makes it seem significantly easier. It's not easy. There's no easy road. All right? Any mountain to top you want to climb, there's no easy path to the top. There's no easy path. In anything. There's no easy path to the top of the mountain. You're going to have to climb. If you want it, you'll climb. If you don't, you're going to be dreaming of climbing it. Time is going to pass, and you didn't start, and now you're going to be filled with regret and resentment because you didn't even try. Trading is just another mountain. There's no back road I can show you and say, hey, come this way. Right? I can just say, hey, you know what? This is what helped me. There's a system that I built. These are the tools that I use. These are the boots that I wear. There's the kind of rope that I'm using. And I want to share the tools I'm using, and let's build a community of climbers. I'm not saying take this path, follow me up the mountain. All right? Because I'm climbing the mountain myself as well. I'm climbing every day. Right? You're never going to get to the point where you're at the top. When you get to the top of the mountain, guess what? You look, there's another mountain. It doesn't end. Okay? So, very wise words, hero. When you see a big down leg, do you always draw your fib or gam box to determine 50% retrace? Also, yeah, Netflix. Go revisit Netflix. Let's see how Netflix. I'm giving Netflix some time to digest. Okay, Netflix. Okay, and then Netflix. Nice little drop on Netflix. I'm really interested in that 85, so I'm still watching Netflix. See if we can get back above 85. So again, when I draw the fib, is very. So the first thing I want to see when you're drawing the fibs or when you're drawing legs is question number one is where is price coming from? All right, if you want to know where something is going or have a good idea where something is going, you first need to know where it's coming from. So what I mean by that is, are we coming from accumulation? Are we coming from some sort of upward expansion, downward expansion? Right, so if we're coming from some sort of consolidation and then we get a break, if we get that break, that first leg, all right, so I'm drawing right away. All right, so your whole pursuit in this case, okay, is there's a continuation coming. Right, so you're basically saying there's more to this move. Just because there's more to the move, it doesn't mean that we just take it there. Because we know the nature of stocks. They tend to pull back. There's fear, there's greed, there's algorithms, there's profit taking. So now it's in your best interest to wait for this thing to cool off by using a few frameworks. One is, hey, you know what? Top to bottom, where's the fib? Okay? Give me that 50-50 zone. That's one. You got one area you're waiting for. So now in this case, when you start to see it fade, you already got that high, you already got that low. After this consolidation, you have your area marked out. On top of that, if you have some other levels that coincide with this area, not just the 50-50 area, but some more things, other key levels, maybe a moving average, preferably moving average, if it's an uptrend. It can be the 20, it can be the 9, depending on the strength of that uptrend. Then you say, hey, you know what? When price comes into this territory, right, I want to be a buyer. All right, so in that case, you have your entire setup. Your job now becomes, okay, hey, what do I need to see? Okay, now that it's in this area, now I want to buy this piece of land in this area. What price point do I want to pay in that territory? Do I want to see other buyers step in? What kind of action do I want to see? So when you see that last piece of confirmation, then you take it to the upside. Right? And you might say, hey, you know what? Okay, that turns into that. And that same cycle repeats. It repeats until it doesn't. Okay? Same cycle repeats. And then you do the same thing. But just know, price cannot go like this forever. Usually there's three, 4 legs. Maybe it's a strong breakout, strong sell-off. There's 3, 4 legs. So most of the time, the first and second leg is the best one. Sometimes the third leg is the big one to the fourth one. And the fourth one, it starts to die down. All right, so just a simple fib retrace can give you that area. But that all depends on where you're coming from. Okay, so say if you're in the middle of chop. Say if you're in the middle of chop. And you start seeing activity like this. All right. So you might say, hey, you know what? Let me draw the fib here. I see a nice little leg, or whatever you may think. Okay. Then you're trading something else. Okay, you're not trading a pullback. You're trading something else. You're not you're depending on the conditions, different rules apply. So again, you can't trade the continuation setups in a chop area at face value. Can you trade those continuation setups in chop area at a lower time frame? If you're an advanced trader, if you know what you're looking for, you can make that argument. Right, you can make it work because there's structure within structure within structure within structure. Right, but generally speaking, you want to look for the second leg, first leg after an expansion move. If that makes sense. Let me know if that answers your question, Fido. Let me know if that answers your question. All right, let's see what SPY does. SPY continues to push. That weekly candle on SPY is looking interesting. Netflix, you want to jump over to the weekly. All right, so Netflix. I want this weekly candle to be a hammer, or next week's candle to turn to hammer and show signs of reversal. So there's still a little bit of selling pressure there. So you see how we kind of came in here? We had that 1 week. So this is what I want to see. Some sort of price profile similar to this. So this week, let it sell off. Next week, see if we get a hammer. And the week after that, if it takes that long, that's fine. We can just go a little further out. The week after that, see if we get that reversal. That's one way out of there. Or if we go inside 212, reversal back the upside. If you look at Netflix on the daily, there's a lot of selling pressure. All right, this is a dip buy. All right, if you look at Netflix on the daily, it's inside. So tomorrow, that break of those highs might go 212 reversal. Okay, if we go back in time, if we just rewind, we went 2 down, 2 up. We went 3, 2, 3. All right, so Netflix is on watch still. So at this point, everything is relatively early. All right. So what we said, when you go to the party a little too early, right, you get involved in the setup. Right, you become like the host. So you don't want to be too late. Right, but you don't want to be too early. You either want to be on time or fashionably late. Okay, especially on that weekly time frame, more confirmation the better. The more confirmation, the better. Okay. And now SPY continues to push higher. Now we're above that PMH. We're headed toward a weekly 50% retrace. We'll do end of stream poll here at the very end. Again, guys, make sure to like the video on YouTube. Make sure to subscribe. Make sure to subscribe if you're enjoying the content. Look at that. Look at that push. Look at that. Those buy blocks, sell blocks are playing out beautifully. Okay, look at that. We're at that weekly 50% retrace. So now we're above third shift highs. I'm going to take a quick break here, guys. Make sure to like the video. Let's put on some CNBC. Man. That game plan, that's a week changing, month changing type of setup. That bounce off that key zone. So you never know which one it is, but if it goes, it goes. If it goes, it goes. So in that case, positioning would be very important. So further dated contracts would be the best way. Can you hold it? I don't think I would hold a 0DTE this long. Okay. So all you can do is give yourself an opportunity. And that was the setup. So let me pull up CNBC here real quick. We'll take a momentary break. And we'll continue. If we're at 50 likes, we'll do the giveaway. If you're a first-time viewer, if you're just jumping in, let us know where you're joining from. Long-time viewers, take the next steps. Join our community to enjoy the delay-free, ad-free stream, along with a host of valuable resources. And you get to be part of a dedicated group of traders. So it's not only me. These are dedicated group of traders focused, ready to put the work in, learn, share ideas, who have a high level of self-awareness and who are not afraid to say, hey, you know what? I got stopped out there. I was wrong. I took this. I took that. It's just so much sharing in our community. Okay, let's take a listen here. We'll be back in just a second.
Interesting client.
I mean, you don't think that has anything to do with it?
No, I think maybe some people are coming to me because they're a little bit nervous. But listen to this. So this guy said, hey, let me take my dividends out, and whatever I don't spend, I'm going to go to the coin store and I'm going to buy gold. And I said to him, you know what? It's probably overvalued. And he said, you know what? I don't care. Because if things go really bad, and this guy is no doomsdayer, but he said if things go really bad, it just makes me feel good.
Tell him to buy bullets.
By the way,
what he's really doing is just taking a little bit of risk off. It's like Carrie trimming the Google, right? It's saying like, hey, it's up a ton. I'm going to take a little risk off, put it in my pocket. In this case, he's buying a gold coin.
By the way, it feels like it's risk on. Like I mentioned that because now, remember, when we came on the air, I guess 34 and a half minutes ago, I said, well, the Dow's at 49.5 just about. Well, now it's at 49.6. And you're better than 500 there. Let's throw up the S. Can we show that? And let's show the S&P, too, which is now pushing 69.40. Remember, we were trying to get everything back from Tuesday's sell-off. So there you're at, above 69.30. That's the highs of the day there, too. So we continue to work our way back as if Tuesday just never happened. Let's get the headlines now with Courtney Reagan. Hey, Court.
Hi, Scott. A winter storm is set to begin tomorrow, stretching 2,000 miles from the Arizona-New Mexico border to upstate New York. The storm is slated to start in Texas and Oklahoma, with heavy snow hitting the Northeast by Sunday. According to the National Weather Service, 132 million people are under weather threats. And the New York City area, latest snowfall estimates for this weekend are 8 to 16 inches. Get your sleds ready. The U.S. and China have signed off on a deal to sell TikTok's U.S. business to a consortium of mostly U.S. investors. According to Semaphore, the deal is set to close this week. The new structure leaves ByteDance with under 20% ownership of the U.S. business and 15% for Oracle, Silver Lake, and MGX, the state-owned investment firm in the UAE. And President Trump could start flying in a plane donated by Qatar as early as this summer. The U.S. Air Force confirmed it will deliver the jet for use as Air Force One within months, though the exact date hasn't been determined. The latest development comes after Trump's flight to Davos on Tuesday had to turn around mid-flight because of an electrical issue. Scott, back over to you.
Okay. Court, thank you very much. It's Courtney Reagan. Coming up is now the best time ever for retail investors. We asked that question the other day, and now we want to get the committee's take because there's a surprising stat in one big name earnings report that has us asking that question yet again today. Whereabouts are they, go? We're not going to go to break quite yet just because I know you want to know about this. BitGo Holdings looks like they just had their first trade. It's an IPO here. It is a digital asset infrastructure company, and it has just opened on the New York Stock Exchange, and we will follow it. It opens up by about 18%. We're back after this.
Markets can move just as swiftly as your day does. And you may be wondering if your portfolio is keeping up. choosing the right investment can seem daunting. But we've got you covered. High income potential is on the other line. Answer the call. Before investing, carefully read and consider fund objectives, risks, charges, expenses, and more in the full and summary prospectus at globalxetfs.com.
It won't be hard to find someone to fix this. But before I started Angie's List, different story. A lot has changed for us at Angie since then, but the issues facing homeowners are the same. And the solution too, skilled local pros. Get started at Angie.com.
Password 1234.
Incorrect password.
Technology, am I right?
We need a new tech lead.
This is the job for Sponsored Jobs. Sponsor your job on Indeed and get matched with quality candidates when you need them most. Visit Indeed.com/hire now.
When I started Walton Goggins Goggle Glasses, I needed a website. And GoDaddy Aero uses AI to make a beautiful website so fast it'll blow my customers' noggins while they're shopping for Goggins for their noggins.
At University of Maryland Global Campus, our students know that every new skill they learn helps move their career forward. That's why we offer an affordable, skills-based education so you can build on your abilities in communication and leadership. Learn more at umgc.edu.
A heart attack? Do they have life insurance?
No.
But we have life insurance. John.
I'm trying to find something we can afford.
Fortunately, in only a few minutes, SelectQuote found John a $500,000 policy for only $29 a month, and his wife Ann a $500,000 policy for only $21 a month. Go to SelectQuote.com now and get the insurance your family needs
at a price you can afford. SelectQuote. We shop, you save.
Over the next 20 plus years, $124 trillion will be transferred, with more than 81% going to spouses and heirs. So how should you prepare? I'm John Schumann, partner and head of wealth transfer at Corient. Advisors are skilled at recommending specific estate and wealth transfer strategies tailored to meet your family goals in a tax and cost-efficient manner. There are a lot of considerations for the successful transfer of wealth, and it's never too early to get professional advice. Contact Corient today.
We've been talking about this film a whole bunch.
What would happen if there was a nuclear ICBM headed toward North America?
Does the world live? No, I'm not going to give away the ending, I promise.
Squawk Box, 6 a.m. Eastern, and streaming on CNBC+.
Welcome back. Breaking news out of Washington. Our Eamon Javers has it for us. Eamon, what do we know?
Scott, President Trump has filed a lawsuit against J.P. Morgan Chase and Jamie Dimon personally over allegations of debanking of Trump-related bank accounts during the period of time that the president was out of office. This is a suit for as much as $5 billion filed by the President of the United States and a number of Trump entities against J.P. Morgan and Jamie Dimon as an individual. And we have a statement here from J.P. Morgan just within the past couple of seconds. They say, while we regret President Trump has sued us, we believe the suit has no merit. We respect the president's right to sue us and our right to defend ourselves. That's what courts are for. J.P. Morgan Chase does not close accounts for political or religious reasons. We do close accounts because they create legal or regulatory risk for the company. We regret having to do so, but often rules and regulatory expectations lead us to do so. We have been asking both this administration and prior administrations to change the rules and regulations that put us in this position, and we support the administration's efforts to prevent the weaponization of the banking sector. That's an on-the-record comment from J.P. Morgan spokesperson Trish Wexler, Scott. So this lawsuit is a 56-page document. We're going through it right now. The gist of the argument is that this debanking was improper and due to political reasons. That's what the president says in the filing. And we saw, Scott, Jamie Dimon, very outspoken in Davos, being one of the few CEOs to go public with criticism of the president over the immigration enforcement issue, criticism of the enforcement operation more broadly. And so this is a flashpoint of tension now between the President of the United States and one of the most powerful bankers on Wall Street, Scott.
All right, we'll follow that. Eamon, thanks for the latest there. That's Eamon Javers. Charles Schwab, that's the stock we want to talk about now because it is getting a bunch of target hikes today following earnings. Target to 138 is the high on my list, but you've got 128, 124, and 120 and 121, excuse me, by a number of firms. Here's something, though, in the earnings that really interested us. Schwab is seeing robust engagement with younger investors, noting that nearly 60% of new retail client accounts opened last year were under the age of 40. The average age of new Schwab clients has fallen by 10 years in the last decade. Josh, I'd like your thoughts on that trend. And also, as we asked the question the other day, and we bring it up again, whether now is the best time ever to be a retail investor. You have more opportunity.
Back. So we're continuing to see the cohort of retail investors continue to grow. I think a record number of retail traders under the age of 40 have opened up accounts on Schwab. That's what they're saying. So let's kind of zoom out for a quick second. We'll look to wrap up the stream around 1 o'clock, 1:30. So just in a few minutes here. We did take a handful of trades, stopped out on the last 2 trades. First 2 trades worked out nicely. And of course, stopped out on IWM as well. So let's zoom out real quick. I know there's a lot of action taking place and things can get confusing or you might not know what's going on. So it's very important for you to just zoom out periodically. Zoom out, see where you are, see where the market is. Of course, and we can see we're trading in this channel. That's the one thing that stands out to me. So if I erase everything, right? If I had to start from scratch, okay, erase all the drawings. Okay, what are some things that are objectively true? Not things that I think are true, but are objectively true. We gapped up, that's objectively true. We came into the 50% retrace of that gap territory, that's objectively true. We bounced. So we sold off, we bounced. Was there a retrace, 50% retrace for the breakdown? No, there wasn't. We just continued to push, accelerate. As we're accelerating, we're creating this nice little channel. All right, it kind of changed, of course, but it doesn't get violated. We're still getting a series of higher lows. As we're getting those series of higher lows, we're starting to potentially get a little tight here. Right, that resistance is getting a little tight. So could someone put in the chat what pattern do they potentially see up here? Okay. Upward sloping resistance and support in a tightening manner. Okay, so we're seeing that. Are we above session highs? Yes. We're above the session highs. So right now we're currently at the highs of the day. Highs of the day on the verge of getting into all-time highs. Monthly highs. Okay, reestablishing control above that monthly high. Okay, so if you're taking those dips, the 5-minute hammers on those pullbacks back the upside, it's working. Okay, it's working. So 5-minute pullback, nice little hammer, break the hammer's high. That's what's working so far. Are we running out of room to the upside? Possibly. But this is the path we're taking, and we took this path all the way to those highs. If we kind of zoom out a little bit more, we know that we're in the jaws of the gap from Tuesday, the beginning of the week. So we're still working our way through the gap. We already filled more than half of it. We're basically 3/4 of the way. 3/4 of the way of filling that gap. If we fall back below this green box here, we'll be back to 50% point of that gap. So right now, what's up for grabs, or what we're looking to do, is first things first, potentially fill that gap. Fill that gap and reestablish control above that monthly candles high. And this is the path we're taking. So if the bulls don't get derailed on this path, this is their path to fill that gap. All right, so once maybe we get to those highs, come in, fill that gap, get a TOG rejection, and start to slide slightly. We can see that. Right? But one thing we can all agree on is things are tightening. So you can see initially wide, wide, wide. Okay, so it's getting tighter and tighter, tighter. Less wide, less wide, less wide. Tighter, tighter, tighter. The textbook definition of this pattern is actually we start to go, put pressure on the support, and start to break. So the question is, if you're bearish, you're probably salivating over that TOG and that monthly upside breaker for that breaking point. So what that would mean is price takes this path to fill that gap. After it fills that gap, it starts to fade to the downside. Okay. And that's where we are now. So in translation, that's what's happening right now. Yeah, we still have to fill the gap from January 20th. So the beginning of the week. So the gap ups have not been filled yet. So it's a very unique situation. Okay. I have the drawings here as well. So you can see, again, same thing. I should have just done the drawings here. So the very unique situation. We have this major gap down beginning of the week that's still open. Major gap down beginning of the week. We gap down. We initially pump, dump, bigger dump. Next 2 days, we gap up. So this gap is still open. This gap is still open. So you can see 3 days, 3 gaps. 3 days, 3 gaps. Out of the 3 days, 2 of them are gap ups. Right? And we're doing completely different things. Yesterday we gap up, blast off, completely collapse, bounce off that gap. In the afternoon, get a massive rally, Greenland news. Now we open up, gap up, dip into the jaws of the gap, get that 50% retrace, start climbing back out. Right, so this gap is what we're looking to fill. The one from the weekly opening gap, the one from Tuesday. Okay? The one from Tuesday is the one we're looking to fill. And that gap fill, 691, 691.47. 691.47. Once we hit to 691.47, the gap has officially been filled. We're at that yearly upside breaker. We're at that monthly upside breaker. So this is probably where a lot of those bulls are waiting. Right, get that TOG rejection. A lot of times we fill a gap to the upside, to the downside. We have a pretty significant reaction once it gets filled. That answer your question, Cloves? Let me know. Let me know. Okay. Folks on YouTube, let's get the likes up. Make sure to like. Make sure to subscribe. Make sure to subscribe. We're a little light on the likes past few days. But the likes tremendously help the stream. It pushes the stream. So likes are currency in the on YouTube. So that's how you show your appreciation, by smashing the like button. Okay, I was looking at the daily chart. Yeah, so the daily chart is not going to, the daily chart will just give you the open and the close. So it looks like the gap is filled, but when we drop into the intraday time frames, we'll give you the exact high and the lows and the open and the close. It gives you a little more context. A little more context. But that daily candle is starting to look good, right? Off that 20 MA. If you jump over to the daily candle, off that 20 MA on the daily, that was a nice bounce. So remember, guys, a couple of days ago, the main thing we were discussing is this is our first pullback of the year. Regardless of the percentage, is the first one we've seen. It wasn't quite 3%, just shy of 3%. We want to see the elasticity of the recovery. So immediately, as soon as we pull back, the next 2 days we gapped up. The next 2 days we gapped up. We were held by a gap up, and then we're continue to push. And it's almost like nothing happened. It's almost like nothing happened. And there goes gold. There goes gold. There goes the Dow. All-time highs on the Dow. IW. The Qs, everyone's waiting for the Qs. So we know the Qs, okay? This was the major thing on the Qs. So rejection. Reject 1, 2, 3, 4, 5, 6. Is the 7th time the charm. Is the 7th time the charm. So the Qs are above the 200. SPY's above that 200 as well. Above the 50. The Dow and IW leading the way. They're all-time highs. Dow's about to make an all-time high here. Gold, another breakout on gold. Okay, 5,000 by the end of the month, or by the end of mid-February is possible. Okay, if it gets to 5,000 by the end of the month, that'll be something, which is possible. But it came right to that bound zone, out of here. So all these levels and all this analysis is done in pre-market. So 691.47 for that gap fill. Gap from joint to 20 almost closed. Yep, that's the one that we're looking at. Almost there. So that, would you guys say that was a good response? Okay, would you guys say that was a good response? Was that a bullish response by the market? All right, that it just took 2 days. Just took 2 days to get back to where we were. Just took 2 days. And by the end of the week, we even have a chance. We even have the chance of being higher than we were when we opened the week. If I get that weekly open. That weekly open is all the way. We're actually well above it, actually. So we even have a chance of being higher than last week's high, I should say. Okay, last week's high is the all-time high. So all-time high is within striking distance once again. Not saying we're going to get there right now, but it's within striking distance. We're one gap up and a strong day away from all-time high. IWM is already there. IW is already there. Everything else is already there. Everything else is already there. Okay. Start to pull back slightly. All right, see if we get that nice push above weekly 50% retrace. Weekly 50% retrace. Of course, that bounce off that prior shift high was the best way to get in at this particular juncture. So let's go back real quick. Okay. Real quick. The most important chart is here. So that path from 690 to those highs is already there. This bounce zone played out beautifully. And this thing keeps going. You could potentially make the argument that that 690 bounce on the lower time frame might have been that handle. But the fact that we kind of just started to move aggressively, kind of went away from that rounded bottom. It's interesting, but we can see they already made that move from that 690 to above those highs. Now the runway is okay. We have open air. Open air. We have the gap fill. We have a couple of levels there. That's the only thing that stands between price and that rejection zone. Okay, that's the only thing that stands between it. That's the only thing. If anyone's still holding those calls, further dated, we might not see you tomorrow. You might take tomorrow off. So we close a couple handle on and looking at the 5-minute chart. We should now be looking for a pullback to build some more liquidity to push higher. And in the form of the handle that's healthier. Way to continue to climb, 100%. Okay, 690.96. So if you're looking for a pullback, late day pullback, you can throw the EMA, the waves on. Okay, we're just riding those waves. It seems like there's something brewing for this afternoon, right? I mean, granted, it's already 1 o'clock. It seems like there's something that's going to take place between now and the close. All right, between now and the close. This is a very silent push higher. Of course, we had 3 red folder catalysts. But we'll see what takes place. We'll run the stream until 1:30ish and then wrap it up. I have 127. Today's the 20. Okay, so the end of, is that Monday? Is that Monday? That's probably Monday, right? 127. Yes, that's Tuesday actually. Tuesday's contracts. That's smart. So there's a possibility for this to go all-time high by the end of the week. End of the week being tomorrow. So I'll look for maybe some entry points for some lottos. At Power Hour, if I do take any, I'll let you guys know. Going to tomorrow. If you can pull back some, get another gap up. We might have to ask Sancho, if Sancho's still in the chat. He's been crushing it the past few days and sharing those ideas as well. Gold is trying to signal something right now. 49.09 high today. So gold already at all-time highs, right? Yeah. Wow, gold. I've been enjoying trading gold. Okay, look at that. Like it's out of nowhere. All right, let's see if that's legit. Look at the level. Look at the level 2. 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 Watch it. Are you guys seeing this? Look at the level 2. Speeding up. Something just came in. Some large sell orders came in. That's just some huge profit taking. See if there's some follow through behind it. And the ATR fell off a cliff. All right, that's the thing. They could keep changing the conditions. Now we're moving 50 cents per 5-minute candle. We're used to moving 90 cents. The market got us used to moving 90 cents. So now we're moving 50. We're moving $1.24 this morning. We're covering half as much ground. All right, so if people are in love with those major, massive gains that was being provided during the high ATR conditions, that condition has changed. Yeah, so in the stream you can see the level 2 and my screen as well. I might find a way to get the level 2 on this screen as well for folks on Google Meets. Does anyone use level 2? If you use level 2 in time and sale. So I'll find a way to get it here along with this screen. Maybe something like copy. I know there's a way to do it. Okay, so you guys see this? Okay. Do you guys see that? See if I can do that with the time and sale as well. Will the level 2 be helpful? Copy. So detach, okay. There we go. Copy. Detach. Boom. How's that looking on your end, guys, on Google Meets? So the real orders are the time and sale. All right, so the time and sale are the real orders coming in. The level 2 are think of it as a limit orders, right? So the orders that are there at those levels, but it's very easy to spoof the level 2 because they're not orders that are there. Absolutely, every pullback is bought up. How does that look on your end on Google Meets? Let me know, guys, or is that too much things on the screen? So I didn't have to do much on my end to provide that, so we can keep that on the chart. So instead of going back and forth on YouTube and on the live stream, you have the SPY's price. IW pulling back here. IW pulling back. Starting to see a nice little pullback across the board. Give us a nice little sweet spot for CNBC right there.
And how significant Gemini.
Have a good rest of your day, Elion. Again, guys, make sure to like the video on YouTube, guys. Make sure to subscribe. We're nearing the end of our program. If you're interested in joining our community, go to smartactiontrain.com. Smartactiontrain.com. We're currently offering 25% off our plan. When you do join, you get access to all the resources and get to be part of our community. We'll go over that real quick. Okay. SmartActionTrade.com. Community tab is the official site. 3 ways to join. So I did introduce that technical bundle, right? So it's a light version of the Discord. It includes most of the features, but it doesn't include the video, the live video. You get access to the chat. You get access to our pre-market game plan. You get access to the post-market recap. You get access to all the private videos. You get access to a ton of things. So there's a great way to kick off your membership. And of course, the premium, you get access to the whole thing. So this is a limited time offer as I'm migrating to a different platform. So take advantage. All right. So you get access to the full Discord when you do join. If you're on yearly uninterrupted access, one payment for one entire year, this is the way to go. You save 65%. Okay. You save $400. So again, once you do pay this one-time payment for the entire year 2026, you don't get billed again until 2027. What do you have access to? 12 months of SPY Strikers. You have access to the bootcamp ticket. You have access to coaching call and everything the premium Discord has to offer. Everyone else who's looking to learn, if you're a beginner, if you're a trader who's looking to get a good understanding, this is the course you should take. I take my time going through this material. This is not just things I just piece together, but I really take time to go through the material to make sure that you're educated on all of these fronts. So every point here, we deliver on each of these points. What day trading is, market fundamentals, platforms, tools, resources, market structure, trends, support, resistance, chart patterns, candlesticks, indicators, 3A plus setups, understanding calls, puts, Greeks, navigating option chain, managing emotions, building discipline, developing a consistent routine, step-by-step trade execution, post-trade review, paper trading, back testing, a roadmap to consistency and growth, all brought to you for $70. Okay, less than a 0 DTE. Okay, so less than a 0 DTE, jam-packed information, and this is the information you're probably going to build the foundation of your trading knowledge base. Okay, they're very, very important. 5 hours. You have access to the PDFs. You have access to the slides. You have access to the free tools. You have access to the Shockwave 15 course. Absolute steal. Okay, absolute steal. I'm trying to make the prices as favorable as possible. Right, trying to make it as favorable as possible so everyday people can really get started. All right, really get started. And best way to do it is be in the community. Free tiers available. The link is in the description. If you're ready to level up, jump into monthly. Jump into technicals only. If you need the video stream, if you need all the premium features, jump in here as well. All right, so make sure to take advantage. All the links are pinned in the description. Any questions, guys? Let me know if you have any questions, and I'll show you where they're pinned. We also have QR codes on the screen that you can quickly take a picture of, and we'll send you right to the payment link. We'll send you right to the payment link. Okay, so if you go, look at that drop, guys. What a drop. There we go. So here comes the selling. Here comes the sellers. Here comes the sellers. So on the video description, all you got to do is scroll down. Okay, scroll down. Everything is there. Yearly plan, SPY strikers, levels, everything you need is in the description. Okay, we'll run the stream for another 20 minutes, 15 minutes, 60 minutes, and then we'll look to wrap up. We will look to wrap up here shortly. Okay, now we're back below the highs. We're back below session highs. We're testing these highs up here. We're testing third shift highs. Waves are starting to flip. Waves are starting to flip. Let's see what takes place here. We're putting some pressure. Remember what we said earlier, team. We're putting some pressure on what? We're putting some pressure on what? This is why the technicals matter. The technicals matter. We're running out of steam. Is this enough to reverse that hourly? Not yet. Okay, for this to reverse the hourly in the next 43 minutes, we need to get below this 50% retrace, and we can start thinking of reversing this entire thing. Then we'll be here, then there's a good chance we get to this territory here. Right, so far, we already broke out of this channel to the upside. So those lows, so we're just looking for now a new low, a lower low. If those lows, those lows also happen to coincide with that equilibrium. Let's see if those legit leads us all the way back to the downside. To get some follow through, see if we get a nice little flag under it. Is the president speaking here?
February 1st?
No, we took that off because it looks like we have pretty much a concept of a deal.
Are mineral rights involved?
They're going to be involved in mineral rights, and so are we.
NAD Plus means something different to
So that retrace reject. Need that hole below this level for continued slide. See if the waves can stay intact. VIX continue to go north. And ideally the index is to continue to sell off. See, that's a nice reclaim, push back up. See if we get that break or reclaim. Break or reclaim is what it's going to come down to. So we made some tremendous strides since the open, guys. Since the very lows of the day, we were at 686. Now we're at 690. Okay, look how much strides we made since yesterday. Or look how much strides we made since that gap down. Okay, since that gap down, we completely collapse, we sell off, we get into these lows, we get a nice push in pre-market, pull back, gap up, make a nice move to the upside, reject, come back in, drop, come to that bounce zone, accumulate for hours. We get a headline, Greenland headline, news about Greenland, spike, chop, 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 open up, gap up, dump, come into the zone, pump up. So lots of things in the past 3 days. Lots of things. Lots of activity in the past 3 days. So you listen here, who's talking?
airlines.
Quickly, you're a defense contractor, and you know the president's comments regarding defense contractors in terms of stock buybacks and compensation. Do you know what those rules are yet? Have they been spelled out by the White House for you guys yet?
I think the folks at the Pentagon are still working through the details with respect to implementation. But from an intentions and objectives perspective, we're fully aligned, right? We want to get leading edge innovations to the warfighters as fast as we possibly can. It's why our engine deliveries to our defense customers was up 30% last year. And we're investing not only in our existing platforms, but in next generation and disruptive partnerships to make sure we do more of that going forward.
Boeing and Airbus are pretty much back to pre-pandemic levels in terms of production and delivery of aircraft. What do you see over the next couple of years? Are you confident they'll be able to expand their production, especially when it comes to engines?
When I talk to both our friends in Seattle and our friends in Toulouse, they are committed to fulfilling the backlogs that they have that we share with them, right? Both in the narrow body and in the wide body spaces. So we're going to be working very hard together for the rest of this decade to step up in rate to make sure that the airlines that want to modernize and expand their fleets are able to do so with GE Aerospace technology under wing.
And one last question, AI. You and I have talked about this in the past. So many people sit there and they say, well, where's the physical manifestation of AI? It's right behind you in terms of how you believe AI is utilized to make yourself, your company, more efficient, correct?
Phil, I'm not sure we're on the leading edge, but there's no question AI is going to help us be better at design, manufacture, selling, and supporting the 80,000 engines that we have in the field today and the install base we expect to grow going forward.
And just by simply driving greater efficiency.
We're going to have greater insights, and greater insights will allow us to be smarter, quicker to certain decisions, more accurate in certain forecasts, and eliminate a good bit of unproductive time, or muda, as our Japanese friends call it.
Very cool. The chairman and CEO of GE Aerospace joining us from here at their engine facility just outside Cincinnati. Kelly.
Okay, we're starting to break down here. So you get that full follow through to that PMH 690.07 and start pulling at that 690. VIX is trying to make a push to the upside. The Dow continues to push the downside. We're seeing IW pull back as well after making numerous all-time highs. See if the Qs can join the party to the downside. If they can, that'll help elongate this move to these lows and eventually in that pre-market high. We'll look to wrap it up here in fourth shift, guys. So far, 5 trades. 2 of the trades worked in our favor. 4 trades on SPY. 2 stop outs, 2 worked out. Clean action. Could have been a little more patient on a couple of them. It just seems like I'm a little too early. Tomorrow is Friday, of course. Ramp down Friday. We'll look to close out the week strong. And then another week in the books. A lot of you are bracing for the storm. Huge snowstorm on the horizon. We're scheduled to get a storm here as well, so that shouldn't impact us too much. But we shall see. Any questions, guys? Any questions? If not, we'll look to wrap it up in 2 minutes. If you're a first-time viewer, continue to tune in. Long-time viewers, take the next steps. All the details are in the description to join our team. That bounce that we did see earlier was part of that game plan. If you tune into the game plan stream, you are in position, right? You are in position to capitalize off of that move. Last couple minutes here, and then we'll wrap it up. But what a day. So things should be very interesting going into tomorrow. There is a possibility for us to get to ETH by tomorrow. What are some catalysts we have on the horizon for tomorrow? Tomorrow we have flash manufacturing PMI and, of course, consumer sentiment. Right, so maybe consumer sentiment can be what takes us over the top. If it's favorable, we'll see. And then next week, we have FOMC. And that basically puts a bow on January. It's nice because trading in January ends on the 30th. So when February starts, the new trading week starts as well. All right, so January has been jam-packed with catalysts. We've seen a ton of things in January. So look to close out the month. We're getting close to the end of the month. Just past that halfway point, look to close out the month as strong as you can. More importantly, look to close out the week as strong as you can, as tomorrow is ramped down Friday. For everyone on YouTube, tomorrow is Free Trade Friday, so I will share the link to the stream. So the only way you can get that link is if we hit that like threshold, guys. We need to hit that like threshold. Once we hit that, I will share the link to that private stream, delay-free, ad-free stream. So on that note, we'll wrap it up here. Hopefully everyone found value. Make sure to smash the like button. Make sure that you're subscribed. We'll see where this thing goes. As far as SPY is concerned, let's lay out the levels. As long as SPY closes above 689.85 going into tomorrow, we're still within striking distance of an all-time high. If we close back below 689.85, it will be more tricky for us to get to that level unless we get a massive gap up. But 689.85 is the level you want to pay attention to. So let's see if the bulls can close it above that level. If they can, that's going to be a nice strong hammer candle on the daily. If we do make ATH today, anything is possible. It's unlikely, but it's on the table. It's possible. All right, so if we do start to slide all the way back to downside, if we get back below the daily upside breaker 688.73, right, that can put a lot of pressure on that candle, turn to a shooter going into tomorrow. All right, so again, thank you for tuning in. Hopefully you found value. We'll see you guys tomorrow at the same time. Tomorrow's Free Trade Friday. Show up early. Let's get the likes up to 50. I'll share the link, delay-free, ad-free stream. If you found value, smash the like button. Stay safe, and God bless each one of you.
improvement can seem daunting, but we've got you covered. High income potential is on the other line. Answer the call. Before investing, carefully read and consider fund objectives, risks, charges, expenses, and more in the full and summary prospectus at globalxetfs.com.
The key to being rich, it's knowing what counts. It's investing in a little inspiration. Our financial advisors help clients find their rich and build financial plans to help them get there. Let's find your rich. Edward Jones.
Do you want to be on CNBC's Disruptor 50 list? Is your startup shattering boundaries, shaking up industries? Scan this code or go to cnbc.com/disruptors to apply before February 23rd.
Growing up in a small town taught me it's not about how many products you have, but whether they truly work. That's why we created Kitsch, to offer hair care solutions that work as hard as you do. Our first product was a simple hair tie, and now we have products like our rice water protein shampoo and conditioner bars. They're packed with amino acids, vitamins, proteins to encourage growth and add shine. At Kitsch, we're here to be your best friend in beauty, so you can be the hero of your day. Find out more at mykitsch.com.
I have a structured settlement and I need cash now. Call J.G. Wentworth, 877 cash now. I have an annuity, but I need cash now. Call J.G. Wentworth, 877 cash now.
It's your money. Use it when you need it.
Call J.G. Wentworth, 877 cash now.
Welcome back to The Exchange. 40 is now the average age of a first-time home buyer. It's an all-time high, according to the National Association of Realtors. As record low affordability prices younger people out of the market. That's had a big impact on home improvement stores, on Lowe's in particular. But the company has a plan to lure Gen Z and millennials into its stores, regardless of home ownership, as both Lowe's and Home Depot have been underperforming. Retail and consumer reporter Melissa Repko is here on set with that story and a little taste of what these new initiatives might look like.
Yes, Kelly, it might sound surprising, but some of them are as simple as handing out free lollipops in stores. They started doing that this month. And they also relaunched their Lowe's Kids Club, which is a free workshop they do, think like DIY projects for little kids.
Home Depot's been doing that for a long time.
Yes, they have. And so these are really projects or they're part of a broader push to get people who are aspiring homeowners into the store. Some of those are younger parents, but they're also Gen Z and millennials that are looking to influencers for ideas about how to fix up their space. That may be a rental, but of course, those could be future customers for Lowe's. And Lowe's wants to find a way to make themselves relevant even today as they wait for the backdrop to improve for housing.
I mean, is it since Home Depot's been doing this, is this a story about kind of these national trends, or is it just that they need to catch up to Home Depot, or to the earlier point, are they both underperforming because there's not a lot of housing activity right now?
It's really a combination, but Lowe's is more exposed to DIY in particular, which is why it's felt more of a pullback and maybe has more of an opportunity this year as people potentially dip their toe back into DIY. The reason why it's more exposed is because about 70% of its sales come from DIY shoppers, and that's about half at Home Depot. So it's more exposure to that customer who's not the pro who comes more steadily for electrical equipment or things like that.
Right, exactly. It might be a little bit more of a discretionary thing. What would you say about kind of shopping trends more broadly? Is the housing market being quiet a big hangover on other stores as well? I think about a Home Goods. There's a lot of that usually drives people into stores. So is it felt beyond them?
I spoke to analysts for this story, and one thing they said that's looking more hopeful as we go into the year is that furniture is picking up and decor, and so that could be an early indication that people are willing to spend a little bit more discretionary on their homes. But of course, the biggest problem here is really twofold for home improvement, which is not just pressure on discretionary, which we hear about from all retailers, but the fact that mortgage rates are still really high and very sticky, and while they're starting to edge down, the question is, will people embrace this potential new normal of higher rates? One promising thing is Gordon Haskett does a survey, and they found in their survey that in the most recent quarter that about 35% of consumers said they'd be willing to buy a home at rates between 5.5% and 6%, and that was 25% last quarter. So potentially people are starting to adjust that rates may not come down to where they used to be, and they may still have to get off the sidelines.
Yeah, well, if we can get the 10-year, I mean, there's the mortgage rate, 6.2% today. So
yes, it's getting closer. It's getting closer to maybe that tipping
Appreciate it, Melissa Repko. That's it for us here on The Exchange. I'll join Brian Sullivan for Power Lunch, though, and we'll be talking to Baseball Hall of Famer Derek Jeter. If you can guess his next big investment, it's sports-related, but it's not baseball. And that's next after this quick break.
Genius ideas often bridge a gap others can't see or hear. That's what pioneers like Alexander Graham Bell knew.
Hello, you've been selected for a quick customer satisfaction survey. Hello?
AI is empowering today's telecom leaders to envision radically new and faster ways to communicate. Prisma Airs, the world's most comprehensive AI security platform, lets your own brave ideas speak to the world. Be a genius. Deploy bravely.
Constant Contact's advanced automation lets you send the right message at the right time, every time.
Down, up, right, left, inside, out. Sometimes it's hard to make sense from nonsense. Go beyond the headlines. A trusted global perspective. The Economist. Know which way is up.
Imagine being part of something revolutionary. Every year, 1 million men in the United States experience acute urinary retention due to enlarged prostate, a medical emergency so painful, it sends them rushing to the ER. For many, it strikes again within weeks. From the pioneers behind the revolutionary skin cancer patch, Medicus Pharma introduces a novel, non-invasive therapy to prevent relapse of AUR. Targeting a $2 billion market, Medicus Pharma, advancing novel therapies.
HPV-16 can cause head and neck cancer, and more people are facing these high-risk cancers than ever before. PDS Biotechnology is transforming how the immune system targets and fights cancer. PDS Biotechnology.
What's our #1 way to improve stock returns? We use options. Look at the returns in the same security over the same period, and you can see why learning to trade options is a necessity. It's not an option. These are some of the option trades we've recently shared with our followers. What would you prefer, the stock return or the options return? Our book will teach you our beginner-friendly strategies you could start using immediately. Get your free copy at itsnotanoption.com. Itsnotanoption.com.
It's another day of gains, not just for stocks, but energy as well, as a massive storm gets ready to take its best shot. Welcome to Power Lunch, everybody. Alongside Kelly, I am Brian. The market may be facing a storm of its own because Mag 7 earnings are about to kick off. Will that be the spark to reignite the trade, or is buying big tech, so last year?
That's a provocative question. And speaking of tech, we're doing a power check on one of the hottest chip names in the market. Intel has rallied 200% from its 2025 low. It also reports after the bell today, and we'll get you ready for those results. And coming up later, Baseball Hall of Famer, entrepreneur, and the global sport surging into the mainstream. Derek Jeter is making a strategic new play. We look forward to talking to him.
Absolutely very cool to have the captain, Derek Jeter, coming on the show, but that's in a few minutes. Let's start this hour with your money and big tech, because there's a big new note out that is sending Meta skyward. Jefferies laying it on the line and laying out 5 reasons you need to think about buying the parent company of Facebook, Instagram, and WhatsApp. Now, those reasons include valuation, as well as a bullish look toward earnings. Meta had a bit of a rough run lately. It is down 5 of the last 6 months. Let's shut up and get more now with the lead author of that note, Jefferies tech research analyst Brent Phil. He's got a buy on Meta, a $910 price target. And Brent, I'm going to just wildly speculate that the fact that Meta has been down 5 of the last 6 months makes the valuation more attractive to you.
Hey, Brian. Yeah, that's right. I mean, I think there's several factors. So remember at the beginning of last year, everyone hated Google. It was an AI roadkill. They weren't anywhere. And we think the same thing is happening with Meta at the beginning of this year, being treated that they are nowhere in AI and that all these investments are a waste of money. So we think that there's an analogy, which is last year, if you a bunch of different call options that we think could go right. And again, it's the most hated story right now. So great stocks have great controversy. This name has an incredible controversy going on. And so we could be wrong tactically when they guide, that maybe they come out with a really aggressive guide in CapEx and it disappoints, but we use that as a buying opportunity.
Brent, just to jump in here, it's Kelly, and I appreciate the contrarian case, obviously. And I mean, I'm sure everyone wishes they were in Google now to have experienced these results. But I can see Meta having an excellent business model with AI, optimizing ad load. Instagram, as I talk about, the algorithm is better and better. It's better experience. But it's, what is it, $1.5 trillion market cap company? I mean, is it ever going to be $4, right? What are the numbers that make this a behemoth rivaling those of an NVIDIA and a Google, even a Microsoft? It's much smaller than they are. Can it be very successful and have some of these strategies that you're talking about, but still just not be worth, quite as much?
Yeah, I don't think our thesis is based on, hey, this has to be a $4 trillion market cap. But I think what we see is a company with $30 of earnings power. And again, you can put a 25 to 30 multiple on it, and you have obviously, at a peak of 30 times earnings, you're at $900 a share, right? Stock's $645. So I think we're not, to your point, I'm not expecting this to become Google or what's happened at Microsoft, but I think that there's a second tier where you look at, could this theoretically get to that type of earnings power? And the answer is yes. And you have to put a big multiple on it, and the answer is no. And so what's the outcome? It's pretty positive.
Well, I tell you what,
so,
it's going to sound weird, but that's what I do. Couple times the last few weeks, I've been on Amtrak, going from New York to D.C. And as you walk forward to maybe use the facility or whatever, you're walking by people, and you can see they're all on their phones. And they're all of them are on Instagram. All of them on Instagram, on the New York subway, on airplanes. Not looking at people's phones, but they have them out. How powerful is Instagram and its possibility to the Meta story? Because I feel like it's increasingly Instagram's world, and we're all just kind of living in it or around it.
I think it's going to become more powerful in the world of AI. Look, I'm a big fan of your show, and I watched this morning up from Davos. So imagine this morning, it's not just the show of interviewing the CEO of Workday and the number of executives that you have on Santa Fe. You go through the list. What if there's an immersive experience where I'm able to put on the Meta glasses and Andrew Ross Sorkin is doing interviews, walking through the audience. We get to smell and kind of feel the environment in Davos. I mean, today we see it from your set. We don't see it in a real immersive experience. And I think there's no one else better positioned than to create this experience. And I'm not saying like this is going to happen near term, but can the world in the next 3 years change where they can create these level of experiences? You're not going to get that at Google. You're not getting that at Amazon. And you're certainly not getting that at Microsoft. And we like all these names for different reasons. But like they have, to your point, this ability with advertisers to engage and immersive content to engage and keep people on the platform. I have 3 young teens, and 2 of the 3 are old enough to use these technologies, and they'll say, look, I use Snap to send messages, but I go to Instagram to learn and have these immersive experiences, and I go to TikTok to have a laugh.
Yeah.
And I really think this immersive experience, what they talk about as teens, and you're seeing that even in the older generation, including me, we're all going and we're getting, you go 5 minutes into the platform, you spend an hour. We've all done this. And I'm still doing this. So I look at this and say, 3, 4, 5 years from now, what is this going to look like? It's going to be a lot more exciting. And what they're doing, the vision of AI is going to be there. Zuckerberg put in the first level of AI. I believe the next level of AI will pay off into this new world that we're talking about. And it's hard to see it right now. But if he pulls it off, and to your point, Brian, that everyone on that train or the plane has this in their hand, it becomes that becomes even more immersive.
Yeah.
The advertisers go to where the experiences are immersive and where people are at. And I think they have a great opportunity.
And that would bring it full
circle. Is it going to be perfect? No.
Then it would be Meta. We always say, should they have dropped the Meta? That would be the Meta play after all these twists and turns. Brett, thanks. Really appreciate it. The shares are up 5% today. Thanks for making the case.
Thank you.
Yeah, I just urge everybody, if you haven't, read Ready Player One. You can watch the movie as well, but that's what he's talking about.
so bright that I'm happy to hold it.
It's unbelievable. Now I have people accusing me of being a Google lover. I'm like, I was using ChatGPT a week ago, and now I'm all in on Gemini. This is how quickly this technology is changing. That brings us to the NVIDIA question. Gemini is powered by Google's own chips. I understand it's TPUs. They don't need NVIDIA chips. NVIDIA is doing just fine, but it's kind of been moving sideways. Still at almost a $4.5 trillion market cap name. You're buying it here. Why?
I am, and you know me, Kelly. I'm a value guy, and I'm uncomfortable with Mag 7 multiples and Mag 7 consensus appreciation. So it took me to get over the hump to buy NVIDIA, but the math is just so compelling. And like you said, you can't really get to the AI toll road without going through NVIDIA. Yeah, Google will have proprietary chips, but most everyone, the market share of chips for NVIDIA is well over 80%. And so what we're seeing here is as long as you're convinced that the AI spending train will keep on going down the tracks, then you buy this stock because they're the single largest beneficiary of that train. And I'm convinced because the folks funding that train are the best capitalized technology companies in the world. So Microsoft, Amazon, Google, they're funding the AI train. So I'm comfortable that Google looks expensive through the rearview mirror, but is actually almost as cheap as Meta is now, but is growing at almost 3 times the rate. So that's the Mag 7 I would ride for 2026.
So finally, then, you want to chime in on the Meta sort of argument or case that interests you yet, or is there anything else?
I think your last guess was exactly right. It's a nice time to buy Meta, and Meta's clearly going to be one of the winners. And it's a nice cheap valuation. But the reason I somewhat prefer NVIDIA, and by the way, we do own some Meta. The reason I prefer NVIDIA is because they are king of the mountain in AI. You can't get there without them. And so if you believe in AI, that's really the only decision you have to make before you embrace NVIDIA, which, by the way, if you look 2 years down the road, is just about as cheap as Meta.
All right, Chris, thanks. Really appreciate it today. Chris,
good to see you again.
MAI Capital Management. Let's get over to Rick Santelli now as we focus in on yields today, with the 2-year breaking above 3.6% to its highest level since December after the PCE numbers this morning. Keep an eye on this as a proxy for what the Fed's going to do. And Japanese yields are in focus as well, with a 30-year sitting near its highest level since 1999. Rick Santelli has more from Chicago. Rick?
Yep, they're 30 years well up there. They're 40 years astronomically high, but then again, 30 and 40 year trade by appointment. It's the 10-year that's the benchmark, not only in Japan, but across the world. That's one of the reasons those long dated are moving more aggressively, because it's a very, very, very thin market. As for the data today, well, let's look at a 6-year chart, a year over year PCE core, 2.8. It's been there for a while. You see the right side? The right side of that chart's much higher than the far left side, even though it's come down, and therein lies the rub. Inflation is sticky. It's not going up, but it's not going down, and it's still above the Fed's target. That really is an ongoing story. Kelly's right. If you look at 2 weeks of 2s and 10s, 2 years been much more aggressive. Right now, it's up nearly 3 basis points. The 10-year right now is virtually unchanged. A lot of that is about the Fed, but that chart has something interesting there. You see where the orange line for briefly past the right center shot above the 2-year? That was the breakout above 4.25. Whether it was Japan or partially some of the other issues of the day, it was significant. It puts the technical breakout on 10s more aggressive, even though 2s are still leading the way. And if you look at a August 1st chart, this is key. If you look at the right side there, that is a trading range. 2s really haven't broken out of it yet. Throw the 10s on there, and you can see what I mean. The 10s are playing catch up, but the 2s still are leading because the Fed is not going to be as aggressive easing, all things being equal. Brian, back to you.
All right, Rick Santelli, thank you very much. All right, folks, we are just getting started. And coming up, does Trump trump diamonds? It's not a game. It's the president versus arguably the most powerful person on Wall Street.
The Bond Report is brought to you by PIMCO, a global leader in active fixed income.
Success is 1% inspiration and 99% perspiration. That's what innovator Thomas Edison believed.
How many people does it take to screw in a light bulb? No, seriously, no one has ever done this before.
AI technology is shining the way for today's consumer electronics leaders. Prisma Airs, the world's most comprehensive AI security platform, helps your own brave innovations light the way. Be a genius. Deploy bravely.
At Corient, wealth management begins and ends with you. We believe the more personal the solution, the more powerful the result. We treat your goals as our own. We never lose focus on the life you want to build. And our experienced advisors design custom-built strategies to help you get there. It's time for a wealth management experience as sophisticated as you are. It's time for Corient.
I think that there are a lot of things that we can look at with the credit cards in terms of their behaviors. It is not unreasonable to have a discussion on the practices of these credit card companies.
I wonder how you're thinking about our AI future.
It can't be just growth at any cost. There has to be some regulation.
The US is in a strong position. Asia we're seeing coming back in many different markets. Companies are not the same as countries, and there's a lot of incredibly strong, resilient, successful companies.
Do you have a life insurance policy you no longer need? Now you can sell your policy, even a term policy, for an immediate cash payment.
We thought we had planned carefully for our retirement.
But we quickly realized we needed a way to supplement our income.
If you have $100,000 or more of life insurance, you may qualify to sell your policy. Don't cancel or let your policy lapse without finding out what it's worth. Visit CoventryDirect.com to find out if your policy qualifies, or call 1-800-523-6900. Coventry Direct, redefining insurance.
Ready to add a Bitcoin fund to your portfolio? Get the Grayscale Bitcoin Mini Trust ETF. The Bitcoin Fund from the world's largest digital asset-focused investment platform. Just search for ticker BTC wherever you invest. Grayscale. Invest in your share of the future.
An eye-popping headline coming from Washington. President Trump suing JP Morgan Chase CEO Jamie Dimon for at least $5 billion, alleging he was debanked, effectively cutting off him and his businesses for political reasons. Eamon Javers has more from D.C. Eamon.
Brian, that's right. This lawsuit sets up a dramatic confrontation between the most powerful man on Wall Street and the most powerful man in the world. In the lawsuit, President Trump alleges JP Morgan debanked his companies for political reasons and that this is part of a wider campaign in the banking sector targeting conservatives for their political views. Now, the suit says that JP Morgan debanked the Trump-related companies on February 19th, 2021, shortly after President Trump left office at the end of his first term. The suit says Trump is, quote, confident that JP Morgan's decision came about as a result of political and social motivations, and that JP Morgan Chase's unsubstantiated woke beliefs that it needed to distance itself from President Trump and his conservative political views. But the suit does not present any evidence that the debanking decision was made for any political reason. It alleges that JP Morgan didn't provide any reason for the debanking the accounts, but that plaintiffs have subsequently learned, it says, that it was done as the result of political discrimination without saying how they know that. In addition, the suit alleges that JP Morgan has placed President Trump's name on a blacklist without specifying what that term means. The suit says plaintiffs have recently learned that JP Morgan Chase, at the direction of Dimon, has unlawfully and unjustifiably published some or all of their names, including the names of President Trump, the Trump Organization with its affiliated entities, and or the Trump family on a blacklist. Now, in a statement, a JP Morgan spokesperson said in part, "While we regret President Trump has sued us, we believe the suit has no merit. We respect the president's right to sue us and our right to defend ourselves. That's what courts are for." JP Morgan Chase does not close accounts for political or religious reasons. "We do close accounts because they create legal or regulatory risk for the company. We regret having to do so, but often rules and regulatory expectations lead us to do so." Now, the suit is seeking, Brian, at least $5 billion in damages. It doesn't come entirely as a surprise, though. Remember, President Trump posted a threat to
commentary would they have around this morning's?
Well, I mean, I think Eamon hit it at the end of his reiterating the JP Morgan statement, which is, their eventual argument is going to be, this is not up to us, that there's regulatory expectations. And by the way, if you recall that the Jan 6 event was at the very start of the Biden administration, this is going to be essentially an argument that the regulatory pressure is forcing our hand, that if we did not do this, that we would hear it from our regulators.
But what does that mean about the regulators? That they're acting politically, or
I mean, if we can go a couple steps through that, I mean, there is that, you could see it through the frame of political pressure. It is, however, cut and dry if you're JP Morgan, by the way, and they have lawyers who are going to make this argument, which is we don't have a choice. That since maybe 10 or 15 years, they've debanked people who have politically sensitive issues, whether or not they're
well, it seems inherently political. Now, it may not be JP Morgan Chase. JP Morgan Chase, it sounds like from your reporting, is putting the blame on regulators, basically saying regulators, and I'm guessing here, speculating, sort of forced them to. But the regulators are political appointees largely, so you could connect the dots. Maybe not to JP Morgan, but it sounds like there is some political element here.
Whether or not it's regulators actually telling them to do so, or the anticipation that would be coming. I think that is the argument that they're making.
All right, quickly, you're supposed to come on and talk about credit cards, but this seems a lot more important, 10%
for sure. Yeah, so as we know, the president's call or mandate that, 10% credit cards for everybody, we're at the point where basically he's asked for lawmakers to do so. That's not really expected to happen anytime soon. There's legislation that's out there that's been stalled. It's unclear if that's ever going to really pass. So in the meantime, how do you sort of, present an olive branch to the president? B of A specifically has confirmed to me that they are looking at products that essentially address that issue. Whether they're 10% for 1 year or 10% forever, that is unclear. But they're exploring it. They may not do it. Now, JP Morgan, on the other hand, is not doing so. Citigroup is potentially looking at it. As Bloomberg has reported, I have not confirmed that part. Now, you have to remember, there are cards out there today from B of A that are 0% for 18 months. So
yeah, 0% intro financing is not quite the same as saying that we're not going to charge you, 20, 30. I would just want underwriting standards. Who do you give a 10% credit card to, right? I mean, it would have to be pretty strict.
Well, Kevin has talked about, this idea that trump cards could be presented for people who are perhaps subprime, who deserve credit but don't get credit today. So an idea could be 10% credit for folks who are on the edge of prime or subprime. That would help them. But when you think about it, it's not flipping a switch and saying all $100 billion of B of A's loan book turns to 10%.
Of course.
So
yeah, but it would. You said they called trump cards. Is that what they?
Well, that's Hazard's idea.
That Hazard's idea. I see. Hugh, thanks very much. We appreciate it today. Hugh Sun.
A lot going on there. But coming up, we are not done here. The trapdoors that may be lurking in today's market. What you can do now to guard against any potential downturn.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
skill they learn helps move their career forward. That's why we offer an affordable, skills-based education so you can build on your abilities in communication and leadership. Learn more at umgc.edu.
Oh, no. Is this the episode with the breakup? Reba, we can't agree on the house. Y'all need Realtor.com. With over 500,000 new listings every month, you could find the one today. This could be it. Better put a key ring on it. Realtor.com.
Running a successful delivery company has taught me something. You're only as good as your tools. We have AT&T Business, and that's why we're the best.
Where?
Here, where? There's nothing here.
Just trust the connection. Otherwise,
What?
You guys are early.
Yeah.
I like that.
get your signature there.
There. You guys thirsty? I just made some lemonade.
Ah, it's really warm in here. Like a good warm. You know, my phone still works down here. It's crazy.
Welcome back to Power Lunch. Time now for the Market Navigator. Geopolitical fears have caused a lot of volatility in the market recently, but our next guest has some thoughts on how to protect yourself. He says it all starts with watching out for those trap doors in the markets. Joining us to explain that thesis is Todd Gordon, founder of Inside Edge Capital. Todd, we have seen a nice bounce back off of some of the geopolitical lows in the last week or so, but you're not as convinced that that at least run has legs.
Dom, I'm probably the first guest to come on Market Navigator and say, I hope I lose money on this trade. It's a hedge, it's a protection. We can go through the particulars of it. But I think it's important to remind yourselves, like, where have we been? Where are we currently on the charts in the context of the crazy headlines, geopolitical and domestic political headlines that are just hitting us every day? Dom, do you know we're unchanged in the NASDAQ since October of 25? We're in this massive range. The market doesn't know which way to go. Massive rotation out of the U.S. into particular areas of technology. We're going overseas. Like, it's all over the place. So I wanted to put an option hedge on to protect in case the headline risk overcomes and we break down a lower consolidation.
And where exactly are these so-called trap doors? We're showing a chart right now, but why these levels, and why do you think that they could perhaps be ones where you can't hold them?
Right, so it's kind of chipping away at the prior lows, just technical analysis 101. You're looking at the SPY, the S&P 500 tracking stock. Trapdoor 1 is about $679 and then $671 below. But what I did is I focused in the NASDAQ 100, the Qs. Those trapdoors are simpler. They're 610 and 600. If we break down through there, probably going to go down, break the 20-day, the 50-day moving average. I'm afraid that if things get bad, we might get down to the 200-day moving average, which is about 566. So what I did, Dom, is I went out to the March options. I took only 5% of the cash that we have in this fast money active account, and I bought a 595, 565 put debit spread. It's a $30 spread, paid about $6.50. It's $30 minus 6.5 is your max profit. It's about a 4-to-1 reward to risk ratio. I don't think we're going to need it. I think we break higher, but with so much headline risk, why not pay for the insurance while it's still relatively cheap?
All right, buy the 595 put and sell the 565 to help cheapen it up. Thank you very much, Todd Gordon, for that. We'll talk to you soon. Kelly, Brian, I'll send things back over to you guys.
All right, Dom, thank you very much. Coming up, folks, you have no doubt seen the forecast, but up next, we'll get more on the real money impact from this coming monster storm. Stick around.
Market Navigator is sponsored by Charles Schwab. Trade brilliantly.
Opportunities don't stop when the market day ends, so neither do we. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade brilliantly with Schwab.
How do we stop it? We need someone who can code in COBOL. What's COBOL?
This is the guy for sponsored jobs.
Indeed can help you get it right the first time. Sponsor your job on Indeed and get matched with quality candidates. Visit Indeed.com/hire now.
I wanted to have control over drinking instead of alcohol having control over me. I started with Or Health about a year ago. It put the brakes on that I had been looking for. I can drink less and say no, and it's the best
shirt I saw on TV, and now I don't have to worry. I got it shipped in no time, and I switched from regular polos to this immediately. The brand is called Collars & Co. They make a regular stretchy golf shirt, but the top has a firm collar on it. I got rid of so many problems by upgrading to this. No dry cleaning needed anymore. I'm free from uncomfortable long sleeves, and the collar stays stiff all day. Get 20% off today using code TV at collarsandco.com.
Are you sure your tax expert is right for you? Switch to TurboTax Full Service. You'll be matched with a TurboTax expert and get real-time updates on their progress. And you get your best outcome guaranteed. Switch to TurboTax Full Service.
All right, welcome back. If you were long natural gas a week ago, give yourself a big pat on the back because gas has been on fire, on pace for its best week ever. It's up over 60%. And yes, this coming storm is a big deal. Temperatures crashing around America, and that could temporarily cut off about 80 billion cubic feet of natural gas production. Another big reason, though, for the move up is what Citigroup calls a multi-sigma move in positioning. Basically, the move in nat gas so sharp that anybody who was short natural gas is getting blown out and having to cover, sending prices higher. To talk more about that and the economic impact of what is coming, Evan Gold is Executive VP at Planalytics. They are a weather impact research firm. Companies hire them to gauge the impact of the weather. And Evan, when I hear that Nashville or Memphis may have a foot or a foot and a half of snow, I'm thinking there's a giant economic story here as well.
There is. Good to be back with you, Brian. Yeah, and it's not just the snow, it is also the ice, right? And the cold temperatures behind it. These impacts from the storm in the south central and the southeast are going to be significant, not to mention the northeast and, as you mentioned, the cold in the Midwest. This is a very, very large consumer impacting event.
So what do you do about it, Evan? I mean, like, this is the thing. And do you know how many people, when we're talking, this comes up, they go, yeah, they're going to be wrong. What do you tell them?
You got to prepare now, right? I mean, the reality is, whether you get 6 inches of snow, 9 inches, this is a well-forecasted event, right, in terms of the overall geography that's going to be impacted. And Kelly, I will tell you, right, the economic impact has already begun, right? All of those need-based purchasing that consumers are thinking about to prepare for this event, prepare staying inside for several days. Ice melt and heaters and boots are up, up to triple digits in the south central and the projected impacted areas, even higher when you get down to a local level. So the consumers are already responding and reacting, and the retailers are ready with the goods on the shelves to meet that demand.
And we're showing and listen, a lot of our viewers and listeners, they know this, right? People buy snow shovels. In my case, they're going to buy like a sled, things like that. But I did not know that they bought boots. And your data shows that sales of boots.
We did that for the last storm.
You did?
Coming. Yeah,
You're in that
I
graphic.
couldn't get the right size on Amazon. I was too late.
Well, Evan, there you go. I mean, how big of a deal is footwear?
It's a big one, right? I mean, we buy to need, right? We buy at the point of need, and it's not just those categories that we talked about. It's everything from, eggs and milk and chili and canned goods and all of those items. If we're going to be stuck inside for several days, right, we need to be prepared, for those activities.
Yeah. But I think what we're also concerned about, we always end up paying more, getting less. And no one wants to go to the grocery store. I'm struggling with right now. I'm like, do I go and stock up on everything?
I'm sure no one will be there.
When everyone else is doing it. Do I wait a few days, but then what if everybody else goes? Do I wait just the whole thing out? And then, I feel decision paralysis.
Well, look, I think the point for the retailers is to be prepared. They have been planning about this. Like I said, this has been a well-forecasted event, so the supply chain have been in motion for quite some time. There's obviously winners and losers. You've got some of those storm-impacted companies there on the screen based on the type of business. Some are going to see a lift in advance of the event. Certainly during the event, there's going to be a precipitous drop in traffic for most of these folks. And then afterwards, you're right, you're going to get folks to come back to replenish or to get those items that they didn't get in advance of the storm.
You talk about should we expect widespread power outages, Evan? Is that part of your planning?
I think so. With the widespread nature of the projected ice, particularly in the south, this has the potential to have several 100,000 or more power outages. And keep in mind, right, for those areas in the south that are going to get the ice,
the gas-powered or maybe a hybrid one, but you can't do like the whole house nat gas one. I think on this short notice, unfortunately. A little late for that.
A little late, yeah.
You can come to my house though. Evan, we did it. We had the whole neighborhood had their laptops plugged in. They were working off the porch the last big power outage 5 years ago.
You do what you can, right?
Yeah.
Exactly.
It's kind of fun.
Exactly.
Evan, thanks very much. Good to see you.
Good to see you as well. Thank
Evan
you.
Gold with Planalytics. Let's get over to Pippa Stevens now for the CNBC News Update. Pippa?
Hey, Kelly. Vice President J.D. Vance is in Minneapolis this afternoon as he's scheduled to meet with federal agents and members of the community. Earlier today, Vance said his intention was to turn down the chaos and project calm amid widespread protests over ICE activity. He said the way to do that was to, quote, stop fighting immigration enforcement and accept that we have to have a border in this country. According to analysis by the Washington Post, the U.S. is continuing a multi-year trend of falling homicide rates and other crimes nationwide. Rates of aggravated assault and burglary hit their lowest point last year since the pandemic began in 2020. And homicides have dropped by about 38% since 2020 in 52 of the largest cities, with many of those cities reporting the lowest murder rates in decades. And the CEO of United Health Group pledged to Congress today that the company would rebate all profits made from the Affordable Care Act exchanges in 2026 in order to make up for premium tax credits that have expired. A company spokesperson says they are working with the Trump administration on details for the rebates. Kelly?
All right, Pippa, thank you very much. Pippa Stevens.
All right, coming up, the Intel on Intel. That stock on track for its best month in 38 years. Is it too late for you to buy it? We'll talk about it next.
This is Mia. She wanted to take her brand nationwide. And with U.S. Bank Business Essentials, a combination of checking and card payment processing, we helped her make a splash. That's the power of Mia, and this is the power of us.
Dad, are we really gonna miss the game?
I think we're stuck here.
Hey, you guys doing okay?
Dad, it's John Elway!
Our plane's having mechanical problems, and I think we're going to miss the big game.
Well, I'm going to badge it to the game. You're welcome to join me. With Badget, you're guaranteed a recovery plan. Search over 5,000 planes from 500 of the best companies. And you're ready to badge it to your destination.
That's really cool.
Do you always have a chauffeured vehicle waiting for you?
It's all complimentary on Badget. It's the one and only way to travel.
Thanks, John. You saved the day.
Thanks, buddy.
Call for a complimentary flight.
Half protection is not enough. Using just an antivirus online is also not enough. Get better protection from online threats. Get NordVPN now.
I wish I loved my smile.
I wish I could get implants.
I wish money wasn't so tight.
I wish I can justify the cost.
I wish my insurance could save me more on dental implants.
See what it can do at ClearChoice. Show us your insurance card and save $5,000 on fixed full double arch implants. That's insurance assurance on a smile that's built for life. Schedule your free consultation today.
We started Henyon & Walsh for people like you. People who share our values, integrity, honesty, and loyalty. The result? We're different because we care about you and your success. We're dedicated to your financial goals, so we'll always give you our very best efforts because you've earned it. We're Henyon & Walsh and committed to you. Get in touch today.
What's our number one way to improve stock returns? We use options. Look at the returns in the same security over the same period, and you can see why learning to trade options is a necessity. It's not an option. These are some of the option trades we've recently shared with our followers. What would you prefer, the stock return or the options return? Our book will teach you our beginner-friendly strategies you can start using immediately. Get your free copy at itsnotanoption.com. Itsnotanoption.com.
Another good day for the markets. Dow up nearly 1%, but right now it is time for a power check. And today we're focusing in on two tech titans that are getting ready to report their results. It's Intel and Apple. Now, they've really been moving in opposite directions just the last couple of months. Intel stock up 50% in a couple of months. Apple, the worst performance performing Mag 7 stocks so far this year, down about 8%. Obviously, long term, very different story. Apple's made you a lot of money. Michael Landberg is the Chief Investment Officer at Landsberg Bennett Private Wealth to break down what he is expecting for these two stocks heading into the print. Michael, welcome. Good to have you on.
Glad to be here.
And I know you and your wife have just amazing choices and shows, so thank you very much. Intel reporting their numbers tonight. I mean, this stock's doubled in a couple of months. Why? What's up?
I think part of it's the excitement of what's going on with the investment. NVIDIA, U.S. government, trying to get semiconductor foundry back in the U.S. Obviously, Taiwan semi, 60% of the market. We don't have a lot of stuff being made here, and I think that's kind of the push. So I think that's hopeful. I think we're all hopeful they can actually deliver some earnings at some point. And it's more importantly, can they deliver news that
as you know, hope is not a strategy.
It's not.
And I'm looking at that stock chart. I'm thinking, Kelly, there's a lot of hope built into that chart.
Looking over the edge of that mountain there.
There's a lot. So I think what's going to happen is if they can deliver some good news on, not necessarily earnings, they've been losing $1 billion a quarter in foundry for a while. I think it's going to be a quantitative story, or qualitative story, is, hey, do they get some new orders? Do they have discussions with Apple? Can they get something besides NVIDIA to be able to look at that? Because obviously NVIDIA has to look at diversifying their foundry use because they can't rely on just a couple big ones that are over in South Korea.
So would you say you're cautious on the stock?
Yeah, I would be. I think if you have good news, I think you could probably buy the stock.
Okay.
I think if it's bad news, I think the stock is going to fall because obviously it's 150% up in 12 months and 50% up since.
So you're going to wait for the.
I would wait. It's not a name that we own now. I'd like to see some more stuff. I like Taiwan Semi I own because that's the juggernaut. That's the 800-pound gorilla. Tough to not own that.
Yeah.
But I'm hoping Intel can be a player. We'd like to own U.S. companies.
Well, speaking of which, what about Apple? They report next Thursday after the bell. 8-week losing streak is on. What do you do?
Apple's a little different. I mean, Apple, we looked at a couple of years ago, 2% earnings growth. Last year, 6%. I think this year you're going to see probably double digits. And part of it's the iPhone 17 is hard to get. I mean, we're looking at probably 17% growth in the iPhone 17. Pro Max is hard to get. I tried to buy it for my daughter three different times.
You said the iPhone 17 is literally hard to get?
I went to the Fifth Avenue store. I went to Naples.
We were talking to CJ Muse last hour about the memory chip problem. Could this already be impacting their supply chain?
I don't know if it's that or just demand. The Pro Max is the bigger one. So I've got 5 people in my house. 2 have Maxes, 2 have Pros, and my daughter has the 15. She's still upset about that because we can't get that. She's the most tech-savvy consumer, and she's like, how come I can't get the phone? I've been to 3 stores.
Wow.
And it's just hard to get. And it's the highest margin phone. That's
but
a positive.
Share should be going up, right? If you can't get them and there's pent-up demand, but instead they're going the other way.
Well, I think part of that is it seems to be the only Mag 7 stock that's actually have earnings growth right now. Everybody else is decelerating. That's why I think Apple's an interesting story here because you're getting growth.
But why is it, to Kelly's point, why is it being sold then? It's down, you said 8 weeks in a row?
I think part of it's because everybody's made a lot of money, but also it's a source of capital. It's 7-8% of the S&P. If you need some money to pull off the table, you got a big profit. So I think that's more of the issue.
Well, if that's right, it's something to think about. Michael, thanks so much. We appreciate it. Michael Landsberg, Chief Investment Officer at Landsberg Bennett Private Wealth. Coming up, baseball legend Derek Jeter. How about that? What an act to come in front of. He joins us live to talk about one of the fastest growing sports in America. Stay tuned.
Comcast Business Advanced Networking and Security Solutions help turn businesses into logistics mastering, supply chain transforming, seamlessly restocking, frictionless paying, poke bowl ordering, cyber securing, mobile access granting, data managing. Welcome to the worlding modern businesses. Powering the engine of modern business, Comcast Business.
With the push of a button, Constant Contact's AI tools help you know what to say, even when you don't.
Password 1 2 3 4.
Incorrect password.
Technology, am I right?
We need a new tech lead.
Sponsor your job on Indeed and get matched with quality candidates when you need them most. Visit Indeed.com/hire now.
Over the next 20-plus years, $124 trillion will be transferred, with more than 81% going to spouses and heirs. So how should you prepare? I'm John Schuman, partner and head of wealth transfer at Corient. Advisors are skilled at recommending specific estate and wealth transfer strategies tailored to meet your family goals in a tax and cost-efficient manner. There are a lot of considerations for the successful transfer of wealth, and it's never too early to get professional advice. Contact Corient today.
Breaking earnings news, Netflix, Travelers, Procter & Gamble, Intel, market reaction, expert analysis, strategies for your portfolio. This week on CNBC and streaming on CNBC Plus.
These bills are crazy.
She has no idea she's sitting on a gold mine. She doesn't know that if she owns a life insurance policy of $100,000 or more, she can sell all or part of it to Coventry for cash, even a term policy. Even a term policy? Even a term!
Find out if you're sitting on a gold mine. Call Coventry Direct today at 800-476-0100 or visit coventrydirect.com.
This is the one who makes sparks fly. Getting it done takes the right material, experience, and the right partner. The professional-grade products you need. Call, clickgranger.com, or stop by. Granger, for the ones who get it done.
Started to do a lot of research on different decking materials. TimberTech was the clear winner. The variability of the colors. Our TimberTech deck feels like a natural wood product, but we don't have to spend our time maintaining it. TimberTech, it's everything wood should be.
All right, we've got a fun one for you today. Markets are up. Let's have a little fun, right? Paddle, one of the hottest sports in America. Basically, it's a hybrid between tennis, pickleball, racquetball, and more, and it's soaring, growing from just 20 lonely courts in America a decade ago to more than 400 today. And if you want the best, you play at Reserve Paddle. They've got 5 clubs in New York and Florida. Their big pro tourney, the Reserve Cup, kicks off today in Miami. And the sport is enticing in some people who were pretty good at other sports. Joining us now is Reserve Paddle founder and CEO Wayne Boych and a 5-time world champion and MLB Hall of Famer in the game of baseball. His name is Derek Jeter. They call him the captain, and he is one of the captains of the paddle teams at the tournament, matched up against none other than Jimmy Butler, who is captaining the other team. Derek and Wayne, good to have you on the program. Wayne, good to see you again. Just getting in bigger and bigger names, but we're CNBC, Wayne. Corporate money. How big? You've got Aston Martin, you got Richard Mille, you've got some big time sponsors coming in. How much corporate money is your sport, your clubs attracting?
All right, good to be on, Brian. Good to see you again. Hello, Kelly. Thanks for having us. Yes, it is. In 3 short years since we started the company, it's gone from, very niche to now in our 3rd year of Reserve Cup, we have a lot of great sponsors and a lot more that are inquiring and I believe going to come in very, very quickly. So we're anchored at Reserve Cup Miami with UBS, Hard Rock Bet, Aston Martin, as you said. 3 or 4 big development companies, including Discovery Land Company, Moncayo Beach Club, Sierra Blanca Estates, and the list is continuing to grow. And it's really a testament to the sport and what we're doing at Reserve. I think they see value in paddle in general, and then secondarily with what we're doing at Reserve and with Reserve Cup, making it more of a lifestyle event, not just about paddle, is pretty exciting. And it makes us unique. We're not the tour, we're not the main tour, and we kind of stand on our own on an island. The players love it, and a lot of people, really want access to it now. So it's great.
You're actually on an island. The MacArthur Causeway, you're literally, figuratively and literally on an island, and I wonder how much that could be a real estate play. We'll get to that in a moment, Wayne. Derek Jeter, I understand you were pretty good at a different sport. What is it makes you attractive to this game? There's a lot of competitors out there for your time, Derek Jeter's attention, Derek Jeter's brand. What makes this enticing?
It's a good question. To be quite honest with you, I didn't know much about paddle at all. I've known Wayne for years, and I think Wayne was probably about 4 years ago. He brought me on, started talking to me about paddle, and I had never even really heard of the sport. But then come to find out, it's the fastest growing sport in the world, and it's starting to grow here in the U.S. And it's growing in the U.S. because of all the great work that Wayne's doing. So I'd be lying to you if I said I was an expert at the sport. I believe in Wayne. successful, what makes startup companies successful, obviously, is the product, but more importantly, the passion. And when I first spoke to Wayne about it, he's so passionate about paddle, and I'm just happy to help him out as much as I can. I don't know how much I can help him, but I'll try.
I think you have the power to do a lot of things. Very quickly, Wayne, again, the island, you got 5 of these clubs, New York City, a couple in Miami. How much of this is, if any, a real estate play? Can you use that as sort of the nucleus of a larger development around this? Because I'm looking at your locations and I'm thinking, these are ripe for development. I don't know. Am I getting somewhere?
Well, listen, I think you've been listening into some of our meetings at Reserve headquarters, but yes.
Never doubt our power here at CNBC, Wayne. Come on.
I'm used to hanging out with powerful people like the other gentleman in this interview. But yes, I think part of the play here for sure is that whether it's on our existing sites or future sites, we have one identified that we'll be announcing shortly that effectively we'll be building out reserve paddle, wellness, and a reserve residences. And we think that's, kind of going to be a calling card for us as we grow the brand, because you're right. You have a community at Reserve that is so active in everything we're doing, whether it's going to Reserve Cups in Miami or Marbella like we did last year, playing our Pro-Am events all over the country, which has quickly become a big part of our business. That if we can find the right real estate to develop on, certainly we could have Reserve as more of a real estate play coupled with the paddle and the wellness that we have. So yes, we are looking at that very closely, and we think over time we will build real estate into the portfolio.
All right, I'm going to switch quickly gears to baseball, game you know something about, Mr. Jeter, because you don't have to share this, although, it's just between us. If you'd like to, I don't know what your largest contract ever was. Maybe you'd like to tell us, or we'll use the Google machine. Now we're seeing 4-year deals.
Be careful with the Google machine.
Yeah, it overstates everything. I found that out as well myself. 4 years, $240 million for a player that I haven't heard much about, Tucker, going to the Dodgers. Does baseball need a salary cap?
No, that's why I'm using this platform right here to announce I'm coming back.
You actually probably could go back and play college ball because they don't seem to care about that anymore.
No, I tell you what, look, baseball as a business, as a sport, is in a really good place. And I think it's like any sport, any other business. If there's someone out there that's willing to pay you for your services, all the better. And, Tucker is a great player. And, there's a lot of money being thrown around, but it just goes to show you the state of the business. You look at the World Series last year, one of the most exciting World Series we've seen in a while. The year before that, it was the Yankees and the Dodgers. So it seems like baseball as a sport has a lot of momentum moving forward, and you just hope that the CBA, which expires after next season, they can come to some terms and there's no work stoppage. But,
do you think there will be a lockout?
I don't know. If I did know, then I'd have a lot more money than I do today. But I'm not sure. I hope both sides could figure it out, because, like I said, the sport continues to grow. There's more viewers, more people watch the World Series than any other World Series in a long time. And you want to build on that momentum. But, I really hope not.
How much would a 21-year-old Derek Jeter sign for right now? What could you command in the market?
A lot.
21, not much. Not much. I was struggling to stay on the team at 21, maybe a few years later.
A billion.
Reminder.
A billion. He could be $1 billion player.
When did you win your first World Series? That you were struggling at 21?
I was 22, Wayne.
Tough years. Tough years. Derek and Wayne. Somehow you guys are both making it through.
Sorry, one other thing. We want to give a shout out to our man Jimmy Butler, our other captain. He had a tough go a couple nights ago. He'll be back stronger and better. We love you, Jimmy.
Yeah. Wayne and Derek, guys, really appreciate it. Here's Jimmy. Thank you, guys. Appreciate it.
Back right after this.
Catch the Market Zone today and every weekday on Closing Bell, sponsored by E-Trade for Morgan Stanley.
Now, there's even more to love about E-Trade, the original place to trade online. Our cutting-edge platforms on web, desktop, and mobile redefine seamless trading. Move at the speed of the
Flight's badge. The badge makes searching and booking private jets as simple as booking a hotel. Just type in your location and find the closest airport. Then choose from over 4,000 jets in one place. When I land, there's always a car waiting for me, courtesy of OneFlight. What's your time worth?
Call for a complimentary flight.
In a world of uncertainty and disruption, how will your investments stay resilient? We've been navigating change for 125 years, always looking forward, anticipating risks, and trusted to manage over $1 trillion in assets worldwide. Solving for the needs of investors today and tomorrow. That's the power of Nuveen.
Wrap it up with a brand new segment we're calling Trending Ticker, the top names you're searching for on CNBC.com. Got to talk SanDisk. In our first one, it's doubled in value alone this month. It's up, Kelly, 1,000% since July. If you put 10 grand into SanDisk, when it IPO'd, you'd have $110,000 right now. Trending ticker. I love the graphic look.
I love that graphic. Let's show that again, Adrian. That was really good. Speaking of trending tickers, Intel reports after the bell today. You're going to want to keep a very close eye on that. Can they meet the hype? That chart looks similar to SanDisk last time.
I'm hosting Squawk Box for some reason tomorrow morning.
Good luck.
I'll see you then.
Yeah. Closing bell starts back.
All right, guys, thanks so much. Welcome to Closing Bell. I'm Scott Wapner, live from Post 9 here at the New York Stock Exchange. This make-or-break moment begins with what else? The big bounce back in stocks. It does continue today. There is the scorecard with 60 to go in regulation. The Dow back positive for the year. We're off the best levels, but nonetheless, we are clawing a lot back from Tuesday's big loss and that sell-off. Once again, it is the Russell that is the standout today. That index up more than 10% on the year. We will have more on that remarkable move coming up in just a bit. And how about Meta shares today? We'll tell you what's behind that big jump in the stock of nearly 6%. We do begin, as always, with our talk of the tape, the president's tariff turnaround, and whether it means it is once again time for stocks to surge. Let's ask Ed Yardeni. He is the president of Yardeni Research, and he is with us, as you see, at Post 9. I mean, nice to see you. It's a noise versus reality market. It continues to be. You're smiling because, I mean, we've seen this movie so many times before. We try and fall for it, and then here we are. What's your view?
Well, my view is that the economy has been remarkably resilient through thick and thin. It's been hit by all sorts of shocks, really since the beginning of the decade. Last year we had the tariffs, and we had remarkably strong second, third, and now probably fourth quarter real GDP numbers. And as a result of the resilience of the economy, guess what? Earnings are extremely resilient. So I think we've got a earnings-led melt-up in the stock market. Earnings are melting up, so the market's melting up.
I mean, I think you lay out the reason why people say ignore all of the noise, and bluster is not policy.
Correct.
And focus on the prize. And the prize is exactly what you lay out, as did David Solomon this morning with Squawk Box. Listen to what he said. All right, well, I'm going to tell you what he said. I will. He said, I think we're set up where we have the possibility for a stronger growth trajectory for the next few years. May not happen, but certainly that's what people are betting on, right?
Well, Scott, I hate to push my brand here, but I've been talking about the roaring 2020s since August of 2020, and it's been working pretty well. I mean, we're 6 years now into the decade, and stock market's at an all-time record high, GDP all-time record high, and so all we got to do is what's going to happen in the next 4 years, and I think it's a reasonable bet that the economy does not have a recession. If it doesn't have a recession, then PEs stay here, and it'll be earnings-driven.
What about the idea that, you know, if nothing else, the erratic policy making is just going to lead to more volatility? It may not lead to a big and prolonged drawdown as we keep witnessing, but it may at the very least, the minimum, just increase volatility.
Well, I think the market's kind of getting used to it, right? I mean, last year, the volatility to the downside was pretty terrible as we got towards Liberation Day, and then a few days later, we saw the president moderate his views, and the market went straight up. I've observed that geopolitical crises are very often buying opportunities, and it looks like everybody else knows that because they all jumped on the geopolitical crisis we had on Tuesday with Greenland, And by Wednesday, it was, so what?
Yeah, but it was more than geopolitical. It becomes with the tariffs, then it becomes potentially economic again. And we don't want to have to get our pads and our calculators out again to try and figure out what additional and increased tariffs are going to mean for GDP here, there, and everywhere else.
On Tuesday, we could have a really bizarre situation where the president was talking about 10% tariffs additionally on Europe, and the Supreme Court, we were all waiting for them to rule, and they might have ruled that they're not constitutional. Now I think we have to wait until February to get the results from them. But look, this is the art of the deal. It's very noisy, it's very loud, it's full of bullying, and at the end of the day, deals are done.
Right now we have a framework.
Exactly.
Maybe we'll learn what exactly the framework is coming up. Maybe
but as long as it doesn't really affect the U.S. economy.
Well, that's the bottom line.
Yeah, that's the bottom line.
Well, that's why the market has reacted the way it has the last couple of days.
But it's not just the bottom line. I think the economy itself has demonstrated as like, make my day, hit me. And we've been hitting the economy with all sorts of shocks since the pandemic, and the economy just keeps moving along. Consumers spend and businesses spend.
The crazy move in the Russells, like something to behold. It's up. It was earlier today up more than 10%.
Led by companies that are losing money.
Yeah, well, I'll come back to you on that in a minute, because Dom Chu is going to take a look at that remarkable move, and it has been truly that, Dom.
I mean, it has been, and more so in just the very recent couple of months here, Scott, to add to your point here. If you want to look at it from a contextual standpoint, I put up a one-year chart of 3 of the ETFs that track those various parts of that market, right? The IBB is the iShares that tracks the S&P 500. The IJR tracks the S&P Small Cap 600 versus the Russell 2000. They both kind of do similar things. And the IJH is the mid cap. As you can see, large caps still rule when it comes to the one-year performance. But let's zoom in to just the last couple of months, because if you look at those same moves higher, IJR, the small cap, is now 13% higher in just the last 2 months. IJS over here, you can take a look at just about 14.5%. So that's the value side of that small cap index. 14% gains there. And the IJT is the more growth-oriented part of that market as well. You take a look there, it's been kind of that same narrative that's driving the rest of the large cap market, the broadening out trade, value over growth. And specifically, 2 key parts of that market in the small caps are doing a good amount of heavy lifting. 2 of the most heavily weighted parts of the Russell 2000 and the S&P Small Cap 600 are healthcare and, yes, the banks. So take a look at the XBI, the S&P 500 equal weighted biotech index on the healthcare side, up 22.5% just over the course of the last 3 months. And the KRE small and mid cap bank ETF up about 16%. So if you're looking for what's driving that small cap surge, it has been in specific parts of the market, but notably, Scott and Ed, in banks and in those healthcare/biotech stocks. So we'll see if that trend continues, guys. I'll send things back over to you.
All right, good stuff, Dom. I appreciate that. It's a perfect setup as we welcome in Stephanie Aliaga of JP Morgan as well. Ed Yardeni, as Dom said, of course, is still here. The big question is, can this last? I mean, we're 22 days in, not even 22 full trading days, and it's up 10% already?
Yeah, it's been a remarkable start to the year. A lot of geopolitical uncertainty, but as we close this week, we're back focused on the fundamentals, right? And what I see in the market, I really like. Finally, this broadening out happening. You have earnings providing a lot of support for markets. Last year, valuations were only up 3%. That means the S&P's 18% gain was predominantly powered by earnings growth. And this year, we think we can see more of the same. We think mid-double-digit earnings growth seems quite possible.
Well, what about with the Russell? What about what's happening with small caps? Is that legit?
So I would caution a little of that exuberance. We have this great slide in the Guide to the Markets I bring up every time a client asks me about small caps. And what it shows is actually, if you look at valuations for small cap relative to large cap, they're actually more expensive for small cap right now, 25 times versus large cap, 22 times. And 40% of the small cap universe, Russell 2000, is still unprofitable. So that doesn't mean that there aren't opportunities on a single stock basis. And sure, maybe it was underappreciated, maybe underloved, if we see this, but I would really caution against holding that rally with both hands.
Ed, I look at the performance of the major averages over the last 12 months, and it's almost, it's hard to believe the Russell's up 18%.
Right.
I mean, okay, the NASDAQ's up 17, but I think most people would think that the NASDAQ's blowing the Russell away over the last year, and it's just not.
It's not, and I think what we're seeing is rebalancing. I mean, people made a lot of money over the past 3 years. We had double-digit increases 3 consecutive years. And I think people are just have a lot of profits. They're taking them and they're rebalancing. And with regards to the Russell 2000, I think Dom did a great job of pointing out that to a large extent it's being led by biotech, which is a form of technology, and people still want to play the kind of the next growth phase of the economy, and banks because of mergers and acquisitions, which by the way is also a story for biotech. So, and then that gets back to the large cap investment bankers because they're going to make a ton of money in all this.
Talk about, yeah, go ahead.
Yeah, no, one thing I might add, I was listening to your panel over lunch, and we were talking about AI adoption, right? And it's like, okay, these small cap companies, these are the adopters. But actually, when you look at the data, the census data from the BTOS, the top adopters by firm size are those large companies with over 250 employees. But then the second in line, they're firms that have 1 to 4 employees. Are those small cap public equities, or are those, a team of Stanford grads in Silicon Valley that are running lean, hyper-efficient startups right now? The opportunity is there on the AI adoption front, but it's not in this public market.
No, I thought the larger point that was being made was that whereas 2024 and 5 were all about the hyperscalers and the mega cap names that everybody knows and loves, et cetera, is now going to move into the adopter stage. And that's one of the reasons why all of these other stocks in all of these other areas can have big moves, because they're the ones who are going to utilize what all these companies are spending on.
Yeah,
Does that sound right to you guys?
That sounds absolutely right. And at the end of last year, I suggested that instead of overweighting the Magnificent Seven, maybe it's time to overweight the S&P 493. In other words, you could look at the equal weight S&P as an outperformer relative to the S&P 500.
You believe that's going to be the case this year?
I think that will be the case this year because, as we were just saying, there's a lot of, the productivity numbers on a macro basis are off the charts.
Yeah, they are.
And it's got to, at the micro level, it's got to be occurring somewhere, and it can't just be among 7 companies.
What about the price that you're willing to pay for stocks? Or we're at 22 times, right?
Yeah.
I interviewed Kathy Wood yesterday on halftime.
That's on the large caps.
Right, the large caps. But she's bullish on the market, thinks we could do double digits again this year, but that you're going to see multiple compression, and that's not a bad thing. That has often happened in bull market periods, and you're going to see it again. Earnings are going to be strong enough to justify where the market is able to trade, but it could trade down to 20 times, and that's just fine. How do you see that?
I think it's possible. I do think we're kind of at a ceiling here when it comes to valuations. And I think it is nice to see in the market right now, despite the rotation away from the Max 7, the overall market is still up. But I do question how much longer that can continue. And if you see too much of a rotation away from these Max 7 firms, and if you see the narrative really begin to sour when it comes to AI, yes, we do think that investors should focus on not just the spenders, but the beneficiaries of AI. But there, it's less clear cut. Going back to your earlier point, is it the time for adopters? To a degree, but with the adopters, AI is a lever, it's not a pure play. And selectivity is going to be really important there.
You favor Europe, right? And areas outside the U.S. still, which outperformed last year. Are they going to outperform again?
So we do think
the U.S. this year?
We do think that the cards are in place for another good year for international performance. The magnitude of outperformance relative to the U.S., we're not so sure. It's not going to be as dramatic of a knee-jerk move. But we do think that there's a lot of reasons why investors should have that international diversification, even when it comes to AI. Right? We're talking about infrastructure plays globally. 85% of chip production happens in Asia. European industrial firms are also really exposed to this theme because their economies are now spending more on infrastructure, and a lot of that is benefiting those firms. So having some of that exposure to different parts of this value chain make a lot of sense, and at a valuation discount.
Last point, the idea of sell the U.S. You've seen that come up again this week because of what the president has said about Europe, and then the whole issue with Greenland. At some point, does that become a more durable thing or not?
I don't think so. I think it's sort of the flavor of the day, and the reality is there have been lots of opportunities even last year to make some serious money in the U.S. stock market. I think the main problem for the U.S. is success. We're 65% of the market cap of the global MSCI, and I always telling people to overweight the overseas market, the domestic market, but it's got too much weight.
All right, we'll leave it there. Ed, thanks. step. We'll see you soon. All right, let's talk about Meta and that monster move today. What could be behind that? Julia Borston with the details for us. Hey, Julia.
Hey, Scott. Well, Meta shares are about 5% higher going into the close on a bullish note from Jefferies, naming Meta its top pick with 5 reasons to buy the pullback. Attractive risk reward with the company trading at a discount to Google. They're optimistic about potential positive estimate revisions, even if the company guides to full-year capex above $110 billion. Confidence that all-star AI hires will deliver an all-star AI model in early 2026, and saying that they believe Meta can continue to drive its core flywheel with AI in 2026. Plus, they say WhatsApp, Threads, and Llama Meta.ai could be incremental revenue engines. Now, even with today's move higher, the stock is still down about 14% since its last earnings report on concerns about Meta's growing infrastructure costs. Scott?
Julia, thank you. We will follow that to the close. It's been up about 5.5% throughout the day, and it's staying right there. How about this? A major new development in the on-again, off-again relationship between President Trump and J.P. Morgan CEO Jamie Dimon. Eamon Javers, there he is. He joins us from Washington with more. Eamon?
Yeah, Scott, this suit sets up a dramatic confrontation between the most powerful man on Wall Street and the most powerful man in the world. Now, in the lawsuit, President Trump alleges that J.P. Morgan debanked his companies for political reasons. The suit says that J.P. Morgan debanked the Trump-related companies on February 19th, 2021, shortly after President Trump left office at the end of his first term. Now, the suit says that Trump is confident that J.P. Morgan's decision came about as a result of political and social motivations and JPMC's unsubstantiated woke beliefs that it needed to distance itself from President Trump and his conservative political views. But the suit doesn't present any evidence that the debanking decision was made for any political reason. It alleges that J.P. Morgan didn't provide any reason for debanking the accounts at the time, but that, quote, plaintiffs have subsequently learned it was done as the result of political discrimination without saying how they know that. The suit also says that plaintiffs have recently learned that JPMC, at the direction of Dimon, has unlawfully and unjustifiably published some or all of their names, including the names of President Trump, the Trump Organization with its affiliated entities, and or the Trump family, on a blacklist. In a statement, a J.P. Morgan spokesperson said in part, "While we regret President Trump has sued us, we believe the suit has no merit. We respect the president's right to sue us and our right to defend ourselves. That's what courts are for. JPMC does not close accounts for political or religious reasons." Now, the suit is seeking at least $5 billion in damages, Scott. It doesn't come entirely as a surprise. You remember, of course, President Trump posting a threat to sue the bank over this very issue on social media over the weekend. Back over to you.
What's more interesting, too, I guess, Eamon, or at least as interesting to us, is this on-again, off-again idea of the relationship between these two men. Sometimes, praising one another from afar and not criticizing each other as well.
Yeah, I mean, Jamie Dimon has been seen as one of the CEOs who's most successfully navigated the Trump era with no really big flashpoints, but there's been a lot of little stuff over the years, and you can go back and take a look at the timeline. In 2023, the president called Jamie Dimon a highly overrated globalist. In 2024, Dimon said that President Trump, though, was kind of right about NATO and China. Then in 2025, we saw these reports that Dimon had been meeting with President Trump at the White House. Then on Saturday, we saw the president take to social media denying that he'd offered Dimon the position of Fed chair and threatening that lawsuit. On Wednesday, we saw Dimon criticizing the Trump immigration crackdown, saying he didn't like what he saw in the videos. And then today we see this lawsuit. So it's been back and forth for years now between Dimon and Trump.
We'll stay tuned for the next move. Eamon, thank you. That's Eamon Javers in Washington. We're just getting started here. Coming up next, top-ranked financial advisor Chris Toomey. He'll be here. What is he telling his high-net-worth clients right now about these markets? Well, he will tell you when we come back at the New York Stock Exchange, where you're watching Closing Bell on CNBC.
Do you care where the economy is headed? What about elections? Or climate change? See the forecast consensus on our future at IBKR Forecast Trader. If you disagree, contract that looks undervalued. But be careful. You must be right more than 50.5% of the time to win. Go to IBKR Forecast Trader.
Are you considering a 1031 exchange but feeling overwhelmed? Origin can help.
Our program simplifies the process, eliminates expensive middlemen, and is informed by 2 decades of real estate investment experience. Download our free guide to learn how to successfully execute a 1031 exchange, streamline estate planning, and avoid common fee traps.
When it comes to 1031 exchanges, knowledge is power. Visit origininvestments.com/1031 to download your free guide today.
Otis, check this out.
Clearly, you've been too busy to get life insurance.
Well, getting life insurance is such a pain.
Not Ethos. It's all online. Takes like 10 minutes. It's affordable, too.
Check your price today at ethos.com.
As teachers, taking care of ourselves is taking care of our students. AG1 gives me a little bit of kickstart to my day, and I know it's full of ingredients that help support my immune system. I've got a whole classroom counting on me. I don't want to miss a day.
How to be Michaela Schifrin. Be born with superhuman strength. Work hard. Then work harder. Win a lot. Like a world record amount. That's how to become the best alpine skier ever. And if that seems too hard, maybe just watch Michaela and the rest of the Stiefel U.S. ski team chase their dreams this winter.
Renovation, meet innovation. With the Bath Fitter PermaFit solution, we measure with laser precision so your tub fits perfectly. With watertight walls that are grout-free and easy to clean. Smart, cost-effective, and guaranteed for life. Bath Fitter.
Meet Omnilux Contour, an LED light therapy mask clinically proven to reduce fine lines and wrinkles. Find out how you can improve your skin at omniluxled.com.
I have a structured settlement and I call J.G. Wentworth, 877 cash now. I have an annuity, but I need cash now. Call J.G. Wentworth, 877 cash now.
It's your money. Use it when you need it.
Call J.G. Wentworth, 877.
Call 877 Cash now to get a $100 gift card for a free quote.
Bring back today after President Trump said he would no longer impose new tariffs on Europe over the Greenland issue. So does that mean it is all clear for investors? Let's ask one of the country's top financial advisors. He is Chris Toomey. He's with Morgan Stanley Private Wealth, and he's here at Post 9. It's nice to see you again.
Nice to see you.
Can you just give me an idea of what the last 48, 72 hours or so have been like for you with clients and thinking about the market, what people are asking, calls off the,
I mean, look,
bringing off the hook?
Yeah, I mean, look, it's been active, because it's year end. Everyone's kind of looking at how last year was positioned, where we are now, what we're kind of doing from a review standpoint and execution standpoint. And then you throw in all the news coming out of Davos, this is kind of the new norm, right? Like, we've had a situation like this almost every month, and I think the market's starting to get more and more used to it, right? You're in a situation where, we had...
Obviously.
Right? I mean, it's been pretty resilient in 2025, given everything that's occurred. And so I think from our standpoint, we don't want to get too emotional. We want to look down at the fundamentals. The fundamentals have been really good, and to some extent, we're basically kind of hitting on everything that we thought we were going to hit on at the end of the year.
This is consistently, to your point, been a bark is worse than the bite policy making and market, right? I mean, that's why the market has been as resilient as it has. Do you worry, though, at some point the bite is going to match the bark, and then we're going to have what looked like Tuesday in a more prolonged period of time?
Yeah, I mean, I think the things that to me are the most concerning aren't necessarily what's happening in the equity market. It really is looking at FX and what happened with regards to the dollar last year, depreciating against most other currencies. The other thing that's concerning is specifically what's going on in the gold market. Is that an alternative to dollar? Is there some concern with regards to dollar exposure? The last is what's going on in the fixed income market. So the thing that we're not necessarily talking about is what happened in the Japanese rates market.
Right.
And if we start to see kind of the bond vigilantes in Japan, in Europe, Europe and the U.S., with rates as low as they are, spreads as tight as they are, what's going to be the secondary effect of those things starting to gap out?
You use the word concerning when you talk about those issues. I mean, to what degree? Is it causing you, because you're concerned about those three things, to maybe dial back your exposure in the U.S. equity market at all, or no?
No, I think what it has to do is not necessarily getting too aggressive with our positioning, because there are so many good things going on. I mean, if you look at it specifically, GDP is good. Earnings have been exceptionally good. Fiscal policy is starting to really kick in, and we're still anticipating 2 rate cuts. And we're not even talking about the fact that we just had financial earnings, and basically every CEO was just talking about all of the opportunities on the other side of the house with regards to M&A, which was up 50%, and now all of this potential with regards to IPOs. You've got these animal spirits coming in the markets, and no one's talking about risk, which is a concern for us.
Well, that's what a lot of people are saying, that everybody's so positive. I mean, when you hear Misters, Solomon and Scharf from Goldman and Wells respectively out at Davos, your boss, talking pretty positive about the macro environment, that you're likely to have economic growth that's better than, and maybe far better than people thought. Tells a story.
100%. I think the concerns for us, because you always have to look at what's the other side of it. And to us, we're most concerned with the fact that there is so much groupthink. Almost everybody on the street is thinking positively. So now that's the time where you have to really start digging in and saying, what are the things that could go wrong? In our mind, the first thing is this: historically, midterms have been a bad place to be allocating money. Over 50% of the time, markets are up. They're only up 5% versus non-midterm times when it's up almost 80% of the time and up over 11%. So this is typically not a good place, because usually in most administrations that first year, they kind of back up the truck. I think we're in a different situation now, in the sense that not only are we getting fiscal stimulus, not only are we cutting rates, but we're also seeing this manufacturing resurgence. And that is an unnecessary or unintended consequence with regards to these tariffs. What you're seeing is, because the U.S. market is the largest market and most profitable market, companies now are fully invested in the U.S. from a manufacturing standpoint, which is having the secondary effect, which I think is lost because of all the AI build out.
What is the typical allocation, per se, about approximate, of your clients to gold? And how have you shifted that around? Because if the targets continue to go up, Goldman today, I think, bumped it over 5,000. I mean, it looks like it's going there.
Yeah, I mean, look, it's tough for us to be allocators of gold just because it's a store of value. There's no return on investment there. What we've been doing is strategically looking at ways to get exposure that will benefit with regards to a depreciating dollar, where we can get a kind of a return on investment. So I would say the average client, might be anywhere between 0 and 5%. We have some clients that probably have almost 10% in it, but that's typically being directed by the client.
I mean, you have to hedge somehow, though, right? I mean, how are you doing that?
I mean, it's
pronounced. What's the most pronounced way you would say you're hedging right now?
It's cash, it's alternatives, and it's also looking at secular stories in the private markets. So, if you look at some of these stories, they're not necessarily dependent on with regards to what's going on economically, but really on a secular way.
Interesting. All right, Chris, good to see you, man.
Thank you.
That's Chris Toomey, Morgan Stanley. Still ahead, the former Federal Reserve Vice Chair, Richard Clarida. He reveals what he sees next for the Fed on rates. We'll discuss coming up.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
Imagine being part of something revolutionary. Every year, 1 million men in the United States experience acute urinary retention due to enlarged prostate, a medical emergency so painful, it sends them rushing to the ER. For many, it strikes again within weeks. From the pioneers behind the revolutionary skin cancer patch, Medicus Pharma introduces a novel, non-invasive
okay, man?
You need to vaporize that sore throat. Vapo Cool Drops. It's sore throat relief with a rush of Vicks Vapors.
Vaporize sore throat pain with Vicks VapoCool Drops.
Running a successful delivery company has taught me something. You're only as good as your tools. We have AT&T Business, and that's why we're the best.
Where?
You're where? There's nothing here.
Just trust the connection. Otherwise, what?
You guys are early.
Yeah.
I like that.
Get your signature there.
There. You guys thirsty? I just made some lemonade.
It's really warm in here. Like a good warm. You know, my phone still works down here. It's crazy.
Can you go into what you just talked about at the NATO meeting?
Well, we have a concept of a deal. I think it's going to be a very good deal for the United States, also for them. And we're going to work together on something having to do with the Arctic as a whole, but also Greenland, and it has to do with the security, great security.
The tariffs are off. Nothing happens on February 1st.
No, we took that off because it looks like we have pretty much a concept of a deal.
Are mineral rights involved?
They're going to be involved in mineral rights, and so are we.
NASDAQ traded LASE is a leading manufacturer of next-generation laser equipment for advanced manufacturing, pharmaceuticals, and military applications. Visit our website at laze.com. Laze, everything laser.
On Public, you can turn any idea into an investable index. Just enter a prompt and put our AI to work. Then, see how your thesis stacks up against the S&P 500. Maybe filter out high-debt companies and cap the PE ratio. Then, lean in where you want more. AI, semiconductors, infrastructure. There are infinite possibilities. Turn any idea into an investable index. Only at public.com.
In front of the camera. Was it in front of the camera?
Yeah, you got it.
Action.
We asked our online students across the country why they chose Southern New Hampshire University.
I wanted to find a university that had a flexible program.
That flexibility was amazing. It allowed me to continue to live my life.
I went to a couple of colleges. None of them worked. So Southern New Hampshire University says that they can get you to that finish line. They get you to the finish line.
Go to snhu.edu.
When was the last time you made a return like this? Options often offer higher returns than stocks, cost less, and can reduce risk. Learn how in our new book. Get your free copy at itsnotanoption.com. Itsnotanoption.com.
We're almost 50. We worked hard and built our dream life.
We're a two-income family. That means life would be very difficult if something happened to either one of us.
So how did we make sure our family and our lives were protected?
We called Select Quote, where a licensed insurance agent found us each a policy under $1 a day.
We got covered the same day without a medical exam to save thousands.
Thanks to Select Quote, our family is protected and we can enjoy life.
You could save 50% or more by calling Select Quote now. 800-320-5114.
Breaking earnings news. Netflix, Travelers, Procter & Gamble, Intel, market reaction, expert analysis, strategies for your portfolio. This week on CNBC and streaming on CNBC+.
There's a reason Kitsch has millions of happy customers. We've created sustainable, functional shampoo and conditioner bars made for every type of hair. Our rice water protein bars repair damaged hair and promotes healthy hair growth for everyone. Our coconut oil bars are a perfect match for curly hair. They deliver major moisture and help reduce stubborn frizz. And our purple toning bars help grays and blondes fight brassiness while bringing in much needed hydration. Find the bar that works for you. Visit us at mykitsch.com.
You certain you can dry those pants?
Please.
Do you foreign prints, sir?
Yeah.
Certainty matters. So when you need the right
as though he wants to keep Hassett in place. That's what he said the last couple of times he's commented on it. Who do you think it's going to be? I mean, the prediction markets keep lifting Rick Reeder and his chances. What do you think?
Well, I do agree. I take the president at his word that it looks like he wants to keep Kevin Hassett at the National Economic Council. So I think the three folks are Chris Waller, Governor Chris Waller, Kevin Warsh, and Rick Reeder. I think they all bring strengths to the possibility. You know, Chris Waller is a good macroeconomist. He's had a good macro call, good communicator. Rick Reeder obviously has unmatched market experience, and Kevin Warsh has been thinking about the Fed for 15 years as an institution and how to change it and ideally to improve it. I think any of those three would be a good choice, and it looks like it's coming right down to the wire.
Does your gut tell you who you think it may actually be? If somebody asks you at a cocktail party, hey, who do you think it's going to be? What do you tell them?
I do lean to Kevin Warsh, but as I said, I think any of the three would be a good choice and could be confirmed.
Okay, fair enough. What was your reaction when you heard about the investigation into Chair Powell?
Oh my! Well, my initial reaction was I wasn't quite sure what to make of it, and within 24 hours, it did sort of begin to peel away. Look, you know, the Fed has a hard job to do. The Treasury Secretary himself has referred to Fed independence as a crown jewel, and I just hope that continues.
You worry that it might not?
I think Fed independence will continue. I think there's broad support in Congress for that and in the statutes that created the Fed. And I'm confident that any of the three names that we just mentioned will be able to preserve it.
What'd you make of the chair's response to the investigation? That in and of itself seemed to be pretty unprecedented, pointed in his rebuke.
Well, it certainly in my memory, and this goes back now into the 1970s, I do think it's unprecedented. My inference is that Chair Powell believed it was important to put down a marker that he and the committee are just going to keep focusing on making the right calls on monetary policy.
What's your take on what appears to be a Supreme Court reticent to allow the president to fire Lisa Cook? At least that's what people are reading from the tea leaves, if you will, of the testimony thus far and what the justices have said.
Yes, of course, it goes without saying, I'm not a legal scholar, but
nor am I.
Did listen in to the oral arguments and obviously read the commentary on it. And it does seem that virtually all the justices were skeptical in their questioning, appeared to be skeptical that the White House had met the standard of for-cause removal. The question is, what do they do about it? One scenario is they just kick it back down to the lower courts, and that may well happen, which just means that the ultimate decision on what is required to dismiss a Fed governor will be down the road sometime. But it does seem very clear to me that Lisa Cook will be able to continue in her position as a Fed governor while this works its way potentially through the lower courts.
Did you say that you actually listened to the oral arguments? And if so, why do you think this matters so much to the degree that you would listen to all of that?
Well, snippets. I had a busy day. They went